one or two things that you can use in your area of expertise. And as we begin, because it's a chilly morning, I'd like us to just do a small exercise, just to warm up, sawa sawa. So this is what I want us to do. Put your right hand up. And then I want you to do this 10 times, sawa sawa. And then, after you're done with your right hand, you'll go to your left. Put your left hand up. You'll do it 10 times. Then kick with your right. This is where we're going to test your balance. 10 times, left 10 times, and then you just shake it off. Sawa sawa? And then we'll count it down. So let's give it a try. So let's go. And then you need to also count with me. So let's try. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I can't hear you. 1, 2, 3, 4, 5, 6, 7, 8, 9. Leg. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Then shake it. 1, 2, 3, 4, 5, 6, 7, 9, 10. Now 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9, 8. 1, 2, 3, 4, 5, 6, 6. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 8. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 6. 1, 2, 3, 4, 6. 1, 2, 3, 4, 5, 6. 5. Now louder. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 4. 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 2. 1. For yourself. I believe even the guys who are now not morning people, you are awake. You can have your seats. Yeah, so my work is simple. I'll be introducing the speaker and also trying to ensure that as much as it's a corporate event, you have a smile on your face and you make it as memorable as possible. Sawa sawa? And so at this point in time, I'd like to invite the Ken Invest CEO, Olivia Rasher, who will be giving us the remarks. So let's give it up for her even as she comes. Yes, karibu sana.
Good morning, ladies, distinguished guests. As mentioned, my name is Olivia Rasher. I'm the Acting Managing Director, Kenya Investment Authority. First of all, I'm delighted to be here during this Investor Education Conference, and I'd like to thank the Nation Media Group for inviting us as partners. And we indeed look forward to being part of this important forum that presents great opportunities to sensitize domestic investors in Kenya, Kenya's business environment, and investment products and services by various stakeholders. So first, allow me to take you through who we are as Kenya Investment Authority and what we do. We are a government agency formed under the Investment Promotion Act of 2004, and our mandate is to promote and facilitate investment in Kenya. We're also responsible for facilitating the implementation of new projects, and we provide aftercare services for new and existing investments, as well as organizing investment promotion activities both locally and internationally. And we undertake policy advocacy within the government policy framework. So at Ken Invest, we have a one-stop center which has streamlined our facilitation process and houses various various government agencies, the registration services, the Department of Immigration, Kenya Revenue Authority, the National Environment Management Authority, Kenya Special Economic Zones, and the Export Processing Zones Authority. There are other agencies in the pipeline to come and join us in the One-Stop Center. And we also facilitate domestic and foreign investors. An investor can register with us for foreign investments, those who are investing to the tune of 100,000 US dollars, and for local investors, 1 Kenya shillings. And our facilitation is free of charge. So I'll just take you through KenInvest's role in supporting domestic investors in Kenya. So we recognize the significance of the domestic investors and entrepreneurs, the role that they play in the economic growth and the employment creation, focus in building Kenya's future multinational corporations through targeted support by one, business counseling and advisory services on various business aspects from startups, established enterprises committed to improvement and upgrading. We also profile SMEs and benchmark. These are key elements of our engagement with SMEs, entailing capacity to facilitate them with the necessary interventions. We have business and investment-made clinics. These are capacity sessions that are held periodically for SMEs, offering training on various business aspects to make investor ready and help them favorably in the global scene. We also matchmake and link. This is done through various fronts, for example, integrating them in the supply chain and value chains on subcontracting arrangements, linkages to suitable financiers, and linkages to investors on agreed partnership agreements. Further, we have created different platforms, for example, networking and pitch forums, where our domestic investors get to interact with suitable foreign investors through B2B, that's business to business engagement, by presenting their business proposals. KenInvest also has a desk at the 4 Biashara centers in Nairobi's Kariobangi, Mombasa, Kisumu, and Eldoret, where we reach and serve enterprises from these regions. And the last one is the Subcontracting Partnership Exchange, which is a program that has been working towards extending the local supplier base of major buyers, capturing the procurement needs and content plans of large companies, benchmarking the capabilities of the profiled SMEs in relation to these, assessing enterprise upgrading and investment requirements. To this end, a number of capacity building trainings have been carried out and necessary linkages have been made. This is a program that KenInvest got into with UNIDO several years back, and we've carried it on to date. So what are the opportunities that are there for the domestic investors? Currently, the government is geared towards bringing down the cost of living for Kenyans, eradicating hunger, creating jobs, expanding the tax base, improving the country's foreign exchange balance, as well as inclusive growth. To achieve these, 6 core pillars have been identified. That's agriculture, micro, small, and medium enterprise economy, housing and settlement, healthcare, digital superhighway and creative economy, and the environment and climate change. In order to achieve these targets of the above-mentioned sectors, massive private sector investment must be realized, therefore giving you massive opportunities to choose from. For example, some of the business opportunities that are available for uptake by domestic investors include the food processing global value chain. Although led by multinational food companies, provides a great opportunity for local entrepreneurs at the onset of the supply chain, especially on raw material, semi-processed goods. Secondly, innovative, affordable housing projects as envisioned in the bottom-up economic model in the housing sector and actual construction. Thirdly, the automobile global value chain, which is controlled by major markets, but provide a fertile trading ground in the automotive aftermarket, where one can invest in servicing automobiles and component manufacturing. The breakthrough here lies in securing subcontracting opportunities with major players. The electronic global value chain has the most extensive geographical coverage. One can take advantage of contract manufacturing arrangements within the value chain to become suppliers to companies who have contractual arrangements with leading brands. There's also the leather and textile global value chain, where domestic investors dominate the textiles, clothing and leather manufacturing sector in Kenya, accounting for around 3/4 of the sectoral value added and employment. Sixth, we have the wholesale and the retail, which is taken up by informal small enterprises. We need to formalize and take up the vast market opportunities. We also have the aquaculture sector, which has potential to produce 11 million metric tons of fish, as opposed to the less than 400,000 tons that it produces. This presents unexploited potential for domestic investors. And finally, the furniture global value chain, which is expanding rapidly. KenInvest also has access to the procedures for registering investments through our e-regulation portal, and also we profile and package investment opportunities which are uploaded on our e-opportunities platform. So I conclude, for domestic investors and entrepreneurs in the room, please reach out to KenInvest and discuss how we can onboard you into the program. And for the prospective investors, we have great opportunities among our SMEs. You can also link up with us to provide you with more details and more information on the 370 profiled projects that are uploaded on our portal. So in conclusion, I wish you all a fruitful celebration today. I'll be here and you can reach out to me. Thank you very much.
Thank you very much. Let's give her a round of applause one more time. So now, one of the things about business is longevity is something we all thrive for, right? It's that we all aspire to have in our businesses and to leave it to the next generation. And I don't know if you're like me, but I remember when I was young, compared to you, I'm still young, but when I was young, I used to look forward to having, like there was something always nation for children. And then as you grew up, there's always, always something for every age group. And over the years, Nation has adapted even to the technological times through TV, through the digital space, and now even in the business, with the Business Daily, there's a continuous growth in that. And so to speak to us today, I'd like to welcome the Nation Media Group CEO, Mr. Stephen Gitagama, who will come and give us a few remarks.
Chief guest, James Moria, CEO, Centum, KenInvest, CEO, our stakeholders who are together today, investors who are here to, pick ideas and learn ideas and exchange knowledge around this place. Good morning. This is a wonderful day, and I would like to, on behalf of our CEO, really welcome you to this inaugural session of investor education. And I would like to just speak to about 4 points around this conversation. NMG exists, or Nation Media Group exists, to transform lives and society and positively impact whatever we do every day in our society. That is the purpose why NMG exists, and that's our mission that drives activities every day. our economy that we are operating in is quite interesting. Yeah, just like it is globally, there are various challenges within the economy that we are in, but there are very many opportunities that are there within our economy. As a result of this, we have great brands that really chart this around these great brands, around this economy that we have. Business Daily is one of those great platforms. Business Redefine, a space that again challenges conversations that are going on in our economy. We have Nation.Africa and BD Africa, again speaking to these consistent conversations that are happening within our economy every day. While this has been going on, and the economy has been changing dramatically, what we've had and the feedback that we always get is, why don't we have engagements and have people having conversations around what is going on within our economy? And there are people who are doing very well in terms of really utilizing and creating value, even as we talk about the economy taking a different direction. And we said, we need a platform where we can exchange ideas and learn from each other and see how we can begin again work our journey backwards and upwards and forward, so that we are able to progress within the economy that we are in. Hence, the Investor Education Conference. That is how it was born. And the agenda here is really to challenge all of us to create a positive environment, a conversation that will really move us to the next level. While we have this massive content that we generate every day, this will also be are there, because we will pick this, harness it, repurpose it, challenge it for purposes of really creating even more value and better value in our society. Yeah? So that's the big plan that we are looking at, also in addition to creating impact within the business that we have. Business Daily, if I could just briefly speak to it, because it's the main brand that is sponsoring this event today. Believes, or rather, in generating more possibilities and more opportunities. Actually, the tagline of Business Daily is more possibilities. So within the massive change within the fintech space, there are a lot of massive opportunities, more possibilities that are there. Now, as Business Daily, we're looking at how do we partner with you, engage with you. You're in the real estate space. Yeah, like Centum is. And we have some wonderful propositions that we have there. How do we partner together and co-create solutions that are going to be of impact, not just in this market, but across the East African community and the region? Yeah? So we are looking at that. We are having conversations. DRC is a great place. There's a lot that is going on there. Those of us who probably might have consumed what was in the East African. DRC Congo, whereas people are talking about there's a lot of insecurity there, there are booming activities within that specific economy. We had some special content around that Saturday, yeah, East Africa. So whereas this is happening, there is always an opportunity that is going on somewhere else. So ours as NMG is really back and bring these opportunities, harness for them, so that we are able to take advantage of this. And we cannot do it alone. The best way of really delivering this and creating better value is really having synergies within different players coming together. Government will play a certain role, private sector will play a certain role, there are regulators who play a certain role, and we all will come together to really create value around this space. So ours is to, mine is to as a great day of conversations. Please, as much as you can possibly do, share as much as you can do, because there's a lot that we'll be able to pick from here and generate continuous conversation that will lead to a progressive investment environment in our country. Thank you very much, and I wish you a wonderful day.
Let's give it up for him one more time, ladies and gentlemen. Thank you so much for welcoming us. Now, I'd like to bring our attention to the program, the hashtag for the day. It's Investor Education Conference. That's the hashtag for the day, Investor Education Conference. That is capital I, capital E, capital C. It's one of the ways in which we can just help to spread the word about this event and also ensure that this event continues to grow bigger and better, because I believe that's what Mr. James would love, to a point where this now becomes an Africa thing, not just in-house. True? Amazing. So please remember, we'll be using this hashtag, if possible, on any social media platform that you're in, ranging from LinkedIn, the more professional ones, to, I don't know how you'll do this at TikTok if you're there, but if you find a way, you can use it there as well. Sawa sawa? Yes. Now, I'm not that much into the investor space. I'm more into the entertainment side with event hosting, if not with the hair. But one of the things that I have appreciated is whenever we speak about investment, Centum is always, you know, and that shows that they're doing a good job, because if I'm not as active as most of you in the investor circles, but I get to hear about our organization, it means that they're either doing a good job or their PR is working overtime. True? I'd like to believe that the former. And so to speak to us today, I'd like to invite our keynote speaker for the day from Centum Investment Company. So ladies and gentlemen, help me welcome on stage, and please let's give him a warm round of applause to Dr. James Moria. Karibu sana daktari.
Thank you, Samuel. Well, I'm not Dr. James Moria. This is James Moria. But James gave me last night, and he asked that we repurpose this. He was supposed to give a keynote address, but he decided, why don't we have banter? And we just engage the audience. So could I have a mic to Dr. James? James, please have your seat. Thank you. I have interviewed James 4 times, including yesterday when Centum announced their share buyback. We've been speaking about the buyback since 2019, James. And the first time I interviewed James, he said something very funny, because I asked him, how many deals do you pipeline? You know, Centum, the PE proposition is where we see the sweet spot. And James told me, Julians, you know, I receive many deals coming to my desk, but anytime they come to my desk, I ask one question. Not how much money we can make, but how much money can we lose? and we have the bandwidth to lose that money. So we'll be discussing investing in Kenya. Is it worth it? Could I please have a mic come to where Dr. James is? Because it will be a discussion between he and I for the next 20 minutes. Yes, but we shall start more from a scene setting on the global scene. So James, the mic is on. Anna?
Yes, thank you very much.
James, a lot is happening globally, and the pointers we receive is that the headwinds are really escalating. We've seen what's happening in the crypto world with FTX. The advanced markets are hiking their rates. We're seeing capital flights from markets like Kenya. When you look at the lay of the land from a global perspective, optimistic, let's start from there.
No, thank you very much, Julians. And before maybe I start, let me just start by thanking Nation for organizing this wonderful event. I think investing is a topic that is very topical and perhaps more ought to be done. And I want to thank you for taking the lead in doing it and for inviting me for this event. It's a pleasure to be here this morning. I thought maybe rather than give a very dry speech, it's better we have a Q&A session so that I can then have a more engaged discussion and probably a more discussion. I think the question Julian has started off with is a very relevant question, because you invest in a context, you invest within a global context and a national context. And that context has a big impact on investment outcomes and how your assets perform. So the question is, what are we seeing globally? So what you're currently seeing globally is an increase in inflation. Now, the objective of any government is to raise living standards of people. And living standards are generally raised through improvements in productivity. And inflation on the other. That makes sense for them is nothing above 2%. So once you go above 2%, the history shows that there's a significant impact on production, on productivity. And that affects the long-term ability of the economy to create new jobs. So what then they tend to do is then to apply the brakes by raising the cost of money, which is interest rates. When interest rates go up, it means that people's incomes come down, and therefore the ability to spend reduces. And they're trying to do so that they can reduce the demand for goods and services, so that then you can get back to where you've been. Now, the reason we are having a high inflationary environment is because of what happened with COVID. Because when COVID came through, one of the major engines of global economy was China, and China still has a zero COVID policy. So the demand that was there, the global demand that was there remained, but the productivity side was constrained. And the second one is a war in Ukraine. And the third one was that there was a huge stimulus where money was injected in the economy just to boost demand. So what the countries with the reserve currencies have done is then slammed the brakes on growth by raising interest rates. So you might be sitting in Kenya and asking, what does that have to do with me in Kenya if there's inflation in the Western world? Now, that has come into this country over the last, say, 15 years has been global capital. So the infrastructure that you see and the investment that has been and some by private entities is because there was a lot of money available globally because of the quantitative easing arising out of the previous financial crisis in 2008. So that crisis meant that governments injected a lot of money and they were in a low inflationary environment. And that capital made its way to this economy, which is why today when we speak about debt, the only reason we're able to borrow was because there was money available and it was a 5%, you're better off taking your money back. That is then what is putting the pressure on the currency. So if you've seen maybe in the headlines in Nation, they speak about pressure on the currency. It's not something that is unique to Kenya. It's a global phenomenon for a lot of any other currency. Now today we have one reserve currency, which is the US dollar. So whether you're in euro, you're in any other currency, you're in sterling pound, you're in Kenya shilling, you're in UGX and the rest, we are seeing a depreciation of the shilling. Now what does that mean for a local central bank? It means that you also have to raise interest rates. Because if you don't raise interest rates, you have two problems. One, because of the imported component of your goods and services, the component you're importing in hard currency. So you also now have an imported inflation in your own economy. So you have to raise interest rates to slow down that growth, that demand, so that you can contain it. The second thing, you must raise also interest rates, otherwise it will depreciate too much. So then rates go up. Now, where does that come in terms of your asset prices? You had bought shares in a company, and the company was doing very well. What tends to happen when you're in a high inflation environment, interest rates tend to be up, and the value of assets come down, the market value of assets come down. So you'll then tend to see, regardless of the performance of the company you've invested in, the valuations tend to come down. And that's why it's now relevant to you, because you might be saying, my company is doing very well, why are share prices coming down? There's nothing wrong that the government has done. We are just in an economic cycle, which are normal. Those are the cyclical. So am I optimistic? Am I pessimistic? The thing with being an investor is realistic about the economic condition that you are in. There's nothing to be emotional about or to be annoyed about, and to say, now, what do I do? So when you're in such an environment, you probably are going to take the least worst of the options available to you. And for many investors is, how do I preserve value that was created? How do I switch perhaps to assets? Because now you're in a high interest rate environment. There are assets now that can generate more for you if you are now not focusing necessarily on capital appreciation, but you're focusing on current income. So let's say you are a 25-year-old person and you want to invest for long-term. Today bonds, long-term bonds are being issued at 13-14%.
Yeah.
If you invest 20,000 shillings per month, years, and you see you can, it's easy to do so. Like when I look back at the amount of money I've spent on friends like Julian's, or coffee here, or whatever, if I'd put it aside at 20,000 at 13%, now I've been working for slightly over 20 years. Guess how much you would have had today in capital? Julian's, how much do you think it is?
Wow. Something in the order of 250?
22 million shillings.
22 million.
It will be 22 million shillings. If then you make 30% on that 22 million shillings, monthly you'd be making 270,000 shillings. So sometimes there's a silver lining in every environment. So it's to understand the environment and then to say, given my investment objectives, what opportunities want you to make money, so they want you. Julian's by saying I'm neither optimistic nor pessimistic. The idea of an investor is to understand the environment you're in, understand then what is the best option available for you. And there's an opportunity. When you have a low inflation environment, you have low interest rates, there's huge opportunity for capital appreciation. When you're in a high environment, what you're then looking at cash income. And naturally the expectation is that asset prices will come down. If you think the inflation is also a good entry point into acquiring assets and waiting for the next cycle.
Thank you for that, and really sorry for that disturbance. We are yet to figure out. I'm told it's coming from the other room. James, thank you for that intro and really setting the scene as far as the macro environment is concerned. So let's bring it now really closer home. We are seeing inflation trending we haven't seen since 2017. The last data we have from KNBS, we are inching closer to the double digits. From an asset allocation standpoint, James, you've already said you're not neither optimistic nor pessimistic, you're just realistic. What sort of lay of the land is it in terms of opportunities?
No, thank you very much. The question is around the current inflationary environment that we have in Kenya and what opportunities there are. So before I address the question of opportunities, maybe briefly about my thoughts about the inflationary environment and how maybe it can be the causes. So you have two issues. One, because we're globally in a low inflation environment, it was cheaper for us as a country to focus on improving our living standards by importing as opposed to raising our own domestic productive capacity. So what that then has led to is that then now you are subject to global supply chain shocks, okay? Because you don't have your own domestic capacity. I had a discussion with the regulator 2 years ago, early last year, on the issue of cement, for example. And the point was, should manufacturing our own clinker, or should we be importing? And this point is that I want to protect consumers by giving them the lowest clinker available globally, and Kenya clinker is expensive. So you want to raise living standards by leveraging on the productive capacity of others. The problem with that is that when this situation is that now the price of imported clinker is higher than our own domestic clinker, yeah, and you don't have enough time to deal with the productive side, yet you have a high unemployment rate. So you're trying to reduce, constrain demand in an environment with a high unemployment situation. So my point is to address the issue of inflation long term, we have to come back and to the nuts and bolts on fixing the productive side of the economy. It's not just a question of playing with interest rates, because today in the US you can raise rates because unemployment is like 3%. But here your rates in an environment is like 30-40%. So the impact for normal living standards for in environment then tends to be disproportionately felt locally. So you have that problem. And then the challenge now with that low productivity is that on it, then you end up with the two deficits we have. You end up with a trade deficit because we are consuming more imported goods than we are making them ourselves. Now to fund that, the government has to borrow, which is why now you end up with a balance of payments deficit and a huge foreign debt component. So we should not blame anybody, we should blame ourselves for imported goods. Sometimes I see us blaming government, they borrowed money. No, it was us who wanted to consume these goods that are imported. They had to be paid, and that's why we borrowed. So the only way we can get ourselves out is then to produce and export competitively. So that's on the one hand. But now, because of the high inflation, the fact that you have a high foreign debt component, if you're sitting in central bank, you must protect the value of the Kenya shilling. If it shifts too much, your debt will increase significantly because now 50% of your borrowings are in hard currency. So as you raise those rates, it therefore means these prices then are going to be under pressure downwards. Because as an investor, then I would rather buy fixed income securities at 14% interest rates than go and buy equities. So then you expect, as long as you see rates going up, it therefore means that equities will not do well for a while. The companies may do well, and you may see companies announcing very good earnings, but then you're wondering why is it not reflected in share prices? And why is it not reflected in trading volume? The trading volumes are low is because investors have switched asset classes. They are now in different asset classes. Then if you have a fixed income portfolio that you had bought earlier, say at 12%, 11%, as rates go up, the value of the bonds tend to come down, so they are negatively correlated. So then your valuation tend to fall. Now the option is, if you are investing fresh money, is then you can go into the bond market. Now the good bonds, you have a choice of going into either domestic currency bonds or hard currency bonds. It depends on what your objective is. If you want to preserve wealth in hard currency terms, now there's a whole of portfolio of Euro bonds available. The Egyptian bonds, Kenyan bonds that you can participate in from Kenya. Or you can buy a Kenya shilling bond.
You note that he didn't mention Ghanaian bonds because they're going through debt restructuring. James, thank you for that. Before I invite any questions to James, shoot and the rules of engagement are, keep it succinct, just one question. Before I invite the team to ask any questions. So we are in an environment where a lot of Kenyans, and I receive this feedback daily, want a piece of the pie in real estate. There's a belief in this market that unless you have real estate in your portfolio, you are not complete. And this is a space you're very familiar with, but many guys will tell you we struggle with illiquidity. Any this market can
why it has been an attractive asset class over time is because of its, it has several attributes that are interesting to investors. One, its ability to preserve. So when you look at, if you look at over a longer cycle, even when interest rates, when you went up. So what real estate tends to do is that it to preserve value relative. So the value went up in Kenya shilling terms, but it remained fairly constant in hard currency terms. So for many investors, you're also thinking about capital preservation over the long term. And that's why it's a useful asset within the basket of portfolio, because for some of the other assets, they're very susceptible to movements in value when sort of you have this kind of economic shocks, like share price can come down by 50%. It's unlikely you'll have real estate collapsing by as much as 50%. Then also rentals tend to keep pace with inflation. So it's like you're having a bond. You see, say you've bought a bond. There's an investor I spoke to who is quite sophisticated, and I asked him. In fact, he holds a senior position in some of the monetary policy authorities, and he was buying estate. And I asked him, why are you not buying the bonds? Because bonds are giving you a higher coupon than real estate. And he told me that some real estate he bought, I think, in 2000, about 10 million shillings. And he said he had the option of having bought a bond at that time at the same 10 million shillings. If he had held the bond for 10 years, the redemption value was 10 million shillings. His real estate was now worth 70 million shillings from a redemption value perspective. The coupon when he would have bought that bond was about 12%. So for 10 million would have received a coupon of 1.2 million shillings a year. He said initially his rent low was about 400,000 shillings. But now it was above this 1.2 million shillings. The rental had kept pace with inflation. So from a longer term perspective, if you're thinking about not short term, I think the challenge we have is that many of us want to make money next year with very little money. So I think you need to look at it over a period. It tends to hold value, and the rentals tend to sort of rise with inflation. So when you're in a global environment that is very volatile, that's why you find it as an attractive asset within sort of an investor's portfolio. Of course, it's illiquid. But what tends to happen is that when you have increase in interest rates, an inflationary environment, all assets are illiquid. It's not real estate. You'll go to that's why prices are coming down. So you might let me take an example of Safaricom. It's doing very well. It's doing better this year than it was doing last year. But the price has come. The company is doing better this year than it did last year, and it has better prospects, but the share price has come from 45 shillings to 25 shillings. Why has it done that? It's because of illiquidity. There are more sellers than buyers. So the differential is an illiquidity discount. So you can't run away from illiquidity. It's one of the risks you must take as an investor.
James always reminds me anytime we have a conversation, you need to price in the liquidity of any asset. So thank you so much for that. Any questions before I continue with James specifically? We wanted to make this really interactive. Any on this side? I can't see a hand. Any on that side? I can't see a hand yet. So let's continue, James. Still on the issue of real estate, how do you respond to those who say that pockets of the real estate market have maxed out as far as yields are concerned, especially from the rental side?
Yeah, that's true. You see, the real estate market responds to what's happening in the real economy. And what to happen is that there's capacity that comes into the market based on the signals coming from the real economy, and this happened in coming into 2013, 2014. The expectations of investors of the economy was booming, so there was a lot of supply that came, and unfortunately there was a slowdown. So you then end up with more supply, and it's not kept up with the demand. And that's normal in any cycle. So then you have a slowdown in new supply coming into the market. Of course, that was made of COVID. You had 2 years of COVID, then you have this pre-election uncertainty. So it's like any other asset class. You want to have shocks, and those shocks find their way into that particular asset class. And that has happened, say, in the office segment of the market, because office was highly affected by COVID as people changed work, started working at home. You have a lot more supply. There's a time there was a shortage of office space. It has also happened with retail in some segments, because the supply side is not coordinated. So they're not sitting down and saying, how do we coordinate supply? So you'll find there's a shortage of hotels, and then everyone notices, and everyone then brings them at the same time. And the demand side also is not coordinating with the supply side. It's also subject to the shock. So those are some of the normal risks that an investor is going to take. But let's assume you are, and this is where one needs to calibrate what their risk appetite is as you're going into different investments, and to have a portfolio sort of that is layered to protect you from different risks. So you probably want to have your low risk, which might be, say, fixed income, and you say, I'm comfortable in Kenya shilling, I'm comfortable preserving my value in Kenya shillings. So that's my core, and it's going to cover an amount of income. And what I can afford to lose or stay for prolonged periods of time with the depressed incomes then becomes your satellite portfolio. Sometimes we tend to overestimate our capacity to take on risk. And therefore, what should be your satellite portfolio becomes your core portfolio. And what should be the satellite becomes so there's an inversion because of an overestimation of risk tolerance. I think sometimes it's helpful to, it's better to err on the side of being more cautious and thinking very carefully what's my risk tolerance, and that's particularly with men. When we make blunders, it's not our fault, and many times because we overestimate our ability to take on risk and to manage that. So there are enough asset classes that ensure that yes, you're getting into more risky asset classes, but at least you've covered your bases with a core portfolio, even in the environment that we are in.
James, we have 2 minutes to go, so let's wrap up this. I want to invite you to make your closing remarks and usher in the next panel. But before that, as you're giving your closing remarks, we have had a protracted downturn in the Nairobi Securities Exchange, and many people are asking, are we really going to see this market bounce back? I remember when I entered into the NSE in 2008, we were just coming off the recession, and the market was at a serious bottom. We had a rally there. We haven't had ever since. Do you see a bounce back?
Yes, the market responds to a number of factors. One is the performance of the real economy. If the real economy is doing well, companies will perform well. 2 is the liquidity that is available with investors. The period you're talking about is from when the NAC government came in. Interest rates came to 2% on T-bills. When interest rates come to 2% and government is not borrowing, banks could not now place with government, and they had to lend. So the banking system is a transmission mechanism of liquidity into the market, and that liquidity makes its way to the stock market and into other asset classes. And that is what led to a significant increase in the stock market. However, as government appetite spending kept pace, because if you're not, the productive side is not growing, the private sector side is not growing, politically you must show growth. So that growth was funded by public sector.
There are some quick questions here. Remember, rules of engagement, 1 question, keep it succinct. Can I have a mic here, please? There's a question here. Any other for James? Okay, I have 1 question. And please introduce yourself.
Hi, everyone. My name is Felicitas Ndegwa. I have a question for you. What opportunities do you see, whatever the perspective is right now, in this very volatile environment, especially regards like investor education? Like, what do we need to tell investors now is an opportunity now, less of what's happening?
I get you. So just to hit the nail on the head, I think from an investor point of view, what are the attractive asset classes at the moment? I think in an increasing interest rate environment, fixed income securities can be attractive, both in Kenya shilling and USD denominated. USD denominated assets were not attractive, but rates are fairly high, and there's a possibility as inflation comes and prices are low is not because of the performance of the companies, it's because of what's happening on the monetary side. And as that unwinds, there's an opportunity for you to create return. I remember when we had a lot of assets in 2008, when the market was depressed, when it turned around, you're sort of making 5, 6x your money. So it depends on risk and return appetite, the time horizon that you're looking at, And so there are opportunities in every market situation. There are opportunities in the real estate market. We've seen appreciation there. So there are opportunities in every situation. It's just to remain rational and sort of just take it as it is, and then understand how best you can play the market.
2 questions there and then we close. Oh, sorry, microphones there, please. So sorry, Sam. Just introduce yourself and shoot it straight.
Good morning, all.
Morning.
My name is Engineer Mongeria Kerimania. I'm a civil engineer, so not much on finance, but something that James has mentioned that I think we need to look at how to help ourselves out. He's mentioned that Kenya as a country generally is a net importer, and usually imports because we want to consume these products. Secondly, he has mentioned that the assets that are more profitable is more on the real estate. My question is, what can we do, either as a country or government or businessmen, so that we can direct ourselves to more of production? Because the problem of importation is because we are not producing here. So what should be done? Because without us producing, we're always moving downwards.
Thank you, Engineer.
Thank you.
Thank you. There was one last one here. Oh, you're good? Thank you. James, please.
No, thank you very much, Engineer Kerimania. And the contract sum, I think, was 50,000 shillings. It was 20,000. And we had a long discussion and negotiation with a good engineer when he was starting his farm for a discount on that 20,000 shillings. So you can have the economy. And I think I gave him this award letter framed when he invited me for his event to see how far his company had come. But engineer, there's an article incidentally I wrote in this Sunday Nation, which was published by the Sunday Nation, on that very subject. It's available on my LinkedIn and the Nation, just addressing the issue of productivity. And just on the subject, on that subject, I remember when I engaged with this particular regulator, he said, look, we don't have an industrial policy in this country. And if we had an industrial policy that then linked industry to our raw materials in agriculture and mining, and then so that you're not just doing industry for the sake of industry, you're doing industry so that you can connect the other producers to more productive value chains. Then you have consumers with more income. All our businesses will do better. So I invite you to look at it and comment on it in the interest of time. Thank you very much.
Thank you. Allow me to close it there. Unfortunately, James Moria, thank you so much for your thoughts. You may resume your seat. Of course.
Thank you very much. It's been a pleasure. It was not, I didn't know the questions Julian was going to ask, so I thought it was more useful if we have a conversation. Thank you very much. Thank you for the kind attention.
Thank you. And that conversation with James has set the scene for our first panel, which invite floor. We have panelists from Ashitiva Advocates, Sylvia. We have Fund Managers Association of Kenya, where we have Rebecca. We have the Custody and Registrars, where I have Kenny Makatiani. And we also have Collins from ICFA. So please come on set. Do we have certificates in the house? Not yet. All right. Oh, so my panelists, please come on set. Let me have microphones for them so that we kickstart this conversation, which should take us for the next 45. Thank you. So, oh, Hisa, yes. Karibu. Do we have sufficient microphones here? Or they're coming? All right. All right. Thank you. So this conversation wants to explore investment opportunities in Kenya, a conversation looking at the macro environment, which James gave us a very good intro to, and how it is impacting the investable landscape in Kenya. And let me just start with Collins from ICIFA. Collins, James has given us some scene setting around the environment and how we've seen an erosion of the investable opportunities. From where you sit, what are the pockets of opportunities and what are the risks we need to have? I think it's on. Mic check.
Okay, thanks a lot. I'd like to take this opportunity to thank you for this event. And from Dr. James Moore is that how we have to classify the class of the assets. Like I can say from my perspective is that right now you can say that we need to put more emphasis, especially in fixed income, especially we also call about the fund manager and also the investors to review the portfolio and do the revision of the portfolio and to restructure much more to coming to fixed income security. And the good thing regarding to the right now it is fixed, it's at 14%. And you can imagine right now, and also given that our inflation in Kenya right now, it's about 9.5%. So for me, I'm feeling there's more opportunity in fixed income security. Thank you.
Thank you. And just in case it is not clear to any of us, fixed income basically is on the bond space, the T-bill space, and even some corporate issuances which are in the market. So when he talks about 14%, he basically has the latest infrastructure bond and that yield being offered. Let me come to the Fund Managers Association and Rebecca. What's your take on the same question?
Thank you very much. So as all the speakers have said, and James laid a very good foundation for our speech today, fixed income is the way to go. And I wanted to just paint a picture which you've alluded to. Fixed income starts all the way from Treasury bill, which is a benchmark rate. That's the 91-day T-bill. And then fixed deposits that bank offer, that's more familiar with most investors here. SACCO deposits, and all the way to treasury bond. So the 14% is talking about anything at, there's normally a yield curve that looks at the government treasury bond from the 2-year to the 30-year. So at the level of 15-year bond all the way to somewhere around 2025, we've seen the government issuing those bonds at a range of 13.9 to 14.15. Now when you come to treasury bills, you're looking at, I saw last week the 91-day T-bill doing 9.6. As a measure, all benchmark to the treasury bill. So if the 91-day T-bill is around 9.2, 9.6, then anyone else, the private, the banks, the fund managers like ourselves, we have products like Unit Money Market, then we are looking at 9%. So, and James talked about, you look at liquidity, all that. So, as investors, then you're looking at those fixed income securities. But I would still say that if you're a long-term investor, there's opportunity in real estate, there's still opportunity in the shares, because they are very heavily undervalued. Yes.
Thank you. And just for the sake of clarity, in case anyone is it, when she talks about the yield curve, assume you have a graph. This is your y-axis, this is your x-axis. So on the x-axis, what you have are the various instruments, the 91 days she's talked about, going all the way until the long-term bonds. On the y-axis is where you have the returns, what she's referring to as the yields. So when you plot that curve, it ideally slopes that way if we are together, yeah? So that tells you you're being placed, just ensuring that we are on the same page. And I want to remind my panelists, we are assuming there might be someone in the audience who doesn't know this thing. So let me come to Sylvia from Ashitiva, and let's talk about the regulatory and legal environment. How is it like from the investments landscape? You know, every year we have the finance bill going to the Finance Act. It changes a number of things. We have seen changes around derivatives, for instance, effective January 1st. How is it broadly speaking?
That's a good question, Julian. The regulatory landscape in Kenya really is a reflection of the diverse nature of the investment landscape. And so I'll speak to it in a way. The Kenyan Invest CEO this morning talked about SMEs and opportunities that are happening there. Moria spoke about, you know, classes that are available, and the other panelists have spoken about that as well. Now, if you look at the way the regulatory has changed over the last few years, has been to recognize very unique and diverse asset classes, right? So previously we had traditional land laws where, you know, they provide a framework for investment in real estate and those type of assets, or the NSE rules, and so on and so on. But over the last few years, we're starting to see things like crowdfunding regulations, where a retail investor can be sitting on one end of Kenya and an SME sitting on the other end, and they're able to, the investor is able to invest in Sylvia as an SME through a crowdfunding platform, right? And so you're seeing the nature in investments are becoming diverse more through regulation over the last few years. Now, the front page today had the issue of FTX. And I can tell you with so much certainty that digital assets in the near future, in as much as there's been so much volatility, there will be digital assets as an asset class, and there will need to be robust framework, regulatory framework around it. So I think for an investor then is sitting in the shoes of an investor, the critical thing is to ask, do I understand this asset class well? Do I have the sophistication to understand it? If not, what advisors do I need to speak to? Do I need to speak to Rebecca? Who do I need to speak to? What's my risk tolerance? And where do I see the future of investment, right? And also just seeking information. There are jurisdictions that have done some of these things, right? Singapore, UAE have their digital, for instance, right? They have their digital asset class investment rules. Seeking to understand those, even as we, you know, rely on more steady, more established asset classes.
Thank you for that. And let me just pivot to your left to Madam Makatiani here. And someone might be wondering, we are speaking in a very lofty way, which seems to sound detached from the ordinary citizen. Are there opportunities downstream, if I could say, for we ordinary Kenyans in this investment scale?
Thank you. Is this on?
Yeah.
Okay, wonderful. Thank you for that. I think James and as a share registrar, we are a primary participant in the equities market, where we support corporates to manage their share register. So allow me if I slant kind of towards that, because I think James gave a very good overview of the opportunities for the ordinary person. So let me speak from the point of view of what we call a retail investor in the stock market. As mentioned, you know, James mentioned, every investor has to have their risk tolerance and to understand the class that they're investing in. So for the stock markets, and a lot of people are talking about it, it tends to be more long-term. It tends to be very susceptible to the global, as with all asset classes. But if you take a long-term view, you understand what you're into. And particularly for Kenyan market, we have a high foreign investor participation. So when on the global market, you see, as James mentioned, a lot of the foreign investors exiting, you see depressed prices. But that doesn't mean that the fundamentals of the companies. So a retail investor coming into the market, if I switch now to what I call the demand side, one of the things that we noticed when we looked at our research, market surveys, is that is a group of Kenyan citizens 18 to 40 that are not really aware of the stock markets and how to invest and how to play. If you flip to the stock market being a long-term investment class, then that's the group target that you want to get involved early at the stage able to do that long-term investment. So we are looking at things that how can we generate interest? How can we generate awareness for this asset class? So even as you make your own decisions, you're aware of it and are able to invest early. How do we make it easy to participate and manage your investment in this asset class? And we're going to technology. So for example, looking at things like AGMs. If you look at AGM participation, even before COVID, there's a group of citizens that owned 5,000 to 100,000 shares, that middle market class, and yet their participation in AGMs was much lower than the representation in the register. And we did an article on this again, also as James says, let me boost it, it's on our website. But then you ask, why is that? Because these are people who, like us, we're busy. A lot of times we don't have the time to go to a physical AGM. So how do you use technology, innovation, to make it easier to participate in activities that involve your asset class? So virtual AGMs, hybrid AGMs. We started looking at that long before COVID, coming out of things like that. So innovative product services, increasing retail participation, and then increasing that awareness and interest in the capital markets at that early age, 18 to 30, where there's an unawareness, or there's not a lot of awareness or not a lot of comfort in what it means to participate in the capital markets. The terminology, what does it mean when you're doing a ex-dividend, cum dividend, what does that mean? When do I invest? So those kinds of information are needed at that early age, and that's also why we launched our app, ShareHub app, which we're also on another panel later with the managing director of that. Again, it's about taking an innovative approach to say, how do we generate interest in the capital markets through edugaming? So when you play games, when you learn the terminology, then you have the confidence to invest and come in and trade. So that's how we're looking at it.
Let me stay with you for a minute and just ask you, are we having a demographic problem, as it were? Because when I speak to players in the SACCO space, they will point to the same challenges, that the SACCO fraternity is having a problem with aging population in its membership. We don't seem to be having the young tax, as they are called, coming in. Is it a demographic problem in terms of taking on some of this opportunity? What's happening?
I think, okay, part of it, let's go back to also what James said, so I'm not the only one that's saying. In that generation, there tends to be a, social media make things quick. It's this instantaneous response, gratification, so you have to invest quickly and get return quickly, and that is not always what investment means. So you may do some investments that will give you quick returns, maybe a company that has high dividend payouts, but you may also make investments that's going to give you a longer term, so in 15 years you're going to get that capital appreciation. And I think it's things like this where that younger age demographic can get the information. It's the information to understand how to invest, why you invest, and what tools you use to invest, because I think that information is needed. So things like this conference are critical. There are companies that do investment forums. I know also Abajani, we've worked with them on ShareHub. They're coming in later. How do you expose that young generation to information, both seasoned investors, such as the information that James has said here, but also just the information, the terminology for them to make their decisions, so that they don't just go automatically to betting. I mean, betting was an issue at one point, or the tendency to say real estate. I remember I participated in a conference with Strathmore University, and a lot of the university students were talking about being able to get into real estate. So real estate is known, but what else is known? We need to put that information to that age group and that demographic and get them the seasoned experience, the advice, so they can make their own decisions. Because it's the idea to start making some of those long-term investments and making your core investments so that later on you can do your more risky investments.
Thanks for that. And speaking about bringing on board retail investors, Eric, HISA is doing quite some work around this. Tell us about it.
Yeah, thanks, Julian. So at HISA, we allow retail investors to basically invest in both Kenyan stocks, US stocks, ETFs as well. Is basically to allow anyone to have a diverse set of asset classes that they can invest. And just to echo what has already been said, given the current scenario, you've seen a lot of, especially the Kenyan market, a lot of companies, their performance of the share price just being down. For instance, Safaricom, close to 40% down since the highs of last year. And it's not because of fundamentals, it's just the general outlook of how the market is. And the goal is then to open up retailers to not just locally, but also to look at different investments. So for instance, what we do with ETFs, so US listed ETFs. So basically, a basket of stocks, let's say for instance, track the S&P 500 index, so that instead of you trying to pick a couple of stocks that you think will perform well, you can then decide to just invest in an index that tracks the market. And again, over the long term, such indices actually offer a better investment channel, especially for retailers and especially for beginners who just want to get a foothold and get started in the market. So those are some of the things that we are doing. But besides that, then on the app, what we do is to offer a lot of educational content. So we have a partnership with Kenyan Wall Street, which generates a lot of educational podcasts, news, discussions that then users come and learn just besides investing, so that the goal is to first of all educate users and then eventually have them start investing for the long term. Yeah.
Thank you for that. And when Eric talks about ETF, that's exchange traded funds. Let me come to Collins from ICFA. And Collins, and there's a question which is coming online. I'm just tweeting and seeing. How do I identify my risk appetite? How do I rate myself when I'm looking at various asset classes? How do I know my risk tolerance level? Let's start with you, Collins.
Okay, thanks for the question. You see, the risk, most cases, regarding to the class of asset that you're investing. Like generally, like I have said, that like fixed income, the risk is a bit lower compared to equity market. So generally depend how you construct your portfolio and your appetite to risk. So if like you invest in the market and you expect more return, you should also have ability to higher risk loss also. So what I can advise the investor is that it's good to diversify your investment, so that you have some portion in fixed income, equity, and other markets like offshore. And also in the retail business, I can also advise investors that it's good to us at least two accounts, the local account and foreign account, because there's a time I was working in a marketing organization and raw material were importing, and given this fluctuation of the USD, you find that you have to buy USD at a higher rate, and it's also eating it. So my advice to all the retail is that at least have two accounts, so that one account you can able to hedge against the foreign volatility. Thanks you.
Rebecca?
Thank you. And I'm going to be a bit simplified because as fund managers, we've been accused and that we use very complex language.
And that's true.
Yes, and of course, going around the room, I can see we have young people, we have middle ages, and also a few old people. So, or rather senior investors. So, risk appetite. There are several questions we ask ourselves. So, the first one, can I afford to use this Can you? On a scale of 1 to 5. Yeah? So that a lot of your age sometimes and your lifestyle, or where you are in your economic status. Yeah? For instance, just to bring it home for more understanding, if I'm a student in university or college, I have my parents, they give me pocket money. I do a side hustle, most Kenyans do. I got a student who told me they sell sandwiches. So they make extra, maybe 500 shillings a day. So in a month, they can save, let's say 10,000 shillings. So since this money, this 10,000 shillings, is for buying the bread, ingredients that are needed to make these sandwiches, they can't afford to lose the money, can they?
No.
No. You're a retiree, you've gotten a lump sum. And maybe you're in a scheme that also pays you a monthly fee. Can you really afford to lose money? No. So, or let's also the picture of middle income Kenyan, like most of us here. You're an executive, you earn between 500,000 to 2 million shillings, you have a few investments, you have that portfolio that he's talking about, also James is talking about, you have a bit of real estate, you have a bit of shares, so you can afford to be flexible a bit because you have a little more income that can be set aside. So risk appetite, in conclusion, is ask yourself, can I afford to lose the money? How is my income doing? What level am I? When I look at myself, am I starting out? Have I made a bit of money and I'm a bit also managed? Am I senior? For I've put aside money for retirement, which I am living on. If I risk this money, like X, you're a retiree, 65 years old, you've just gotten 10 million shillings. You've been told about this online thing for forex trading. Most people are on that bandwagon. And you take your 5 million out of your 10 million and put it there. This 10 million was meant to make you live at least for the next 10 or 20 years. What happens when, because it's a risky, forex is risky as long as it's trading, eh? So you can lose actually the 5 million becomes 3 million shillings within a very short time, like less than a year. So can you afford to lose money? No. So I would define it that way, yeah, in a simple language.
Good point there. Can you afford to lose that money? And Sylvia, because question which came onto that one online on Twitter. Someone is asking, there are so many, especially real estate firms, which ask us to give investments the money and they promise high returns. Are there any legal safeguards around this when it all goes belly up?
Absolutely, there are. So the first step, and it ties down to the question of risk appetite. Even before investing into land, the first thing to do is to do your due diligence. And due diligence involves a broad set of things. One, there's the legal due diligence, where you know the typical things, the title, ownership, any irregularities around the land, etc. Then ensure each circumstance there has a framework in place. And that framework is done through an agreement that would spell out what happens when things go belly up, so to speak. And there are basic, very simple protective measures that you can put in place, right? If a sale is not completed within a specific time, the money ought to be returned. If your risk appetite is low, then insist that the money has to sit in an escrow account somewhere with a reputable law firm or in a custodial bank account, etc. So these protective measures are there, and not just for real estate, but also other new coming up asset classes. But every event, I mean, even for myself, and I think lawyers are the worst, they're the ones who don't take their own advice. They'll buy land and they'll never get into that agreement. But I personally seen, and that's even my practice area, I've seen transactions go completely bad. And it's on that one specific failure. Failure to have due diligence, and 2, failure to have a good agreement in place. If you have a good agreement in place, you can get back your money, even without going to court. Even if it becomes troublesome and you do end up in court and you spend 3 years in court, with a strong, solid agreement, you know you will get back your money and hopefully even some interest in the.
Good point. Let me come to Madam Makatiani here, and the question, and this question really goes to you and Eric. Someone is asking online, are retail investors always at the mercy of the institutional investors?
I'm glad also Eric is here. It's a well-known fact. I mean, if you look at the makeup of a register and you look at the top 30 will always be, institutional investors, and they will make up 85% of the share capitalization. That's a well-known fact. But having said that, retail investors are important. Retail investors have a voice in terms of the fact that because they're the largest quantity, so the number of retail investors will be much larger than the institutional investors. The opinions of retail investors carry sway sometimes in terms of the public opinion. So you have the institutional investors who have a lot of information and advisors behind them. But if you don't also manage the retail investors so that they're aligned with your sentiment, then their information can sway, even if you're trying to do a transaction in the market. You have seen where investors oppose it, or the public opinion on it sways because of how retail investors speak. So that's very important. So for this reason, it's important too that companies interact with retail investors. And it's also important retail investors participate. So once we get over the stage of where we have addressed the information, maybe through our app you understand the terminology, there's also that entry point. How easy is it for retail investors to get into and out of the market? So when you see technology apps like HISA and other apps that are making it easier for retail investors to come in bulk, because sometimes they come in with small volumes, but over large quantities. So when it becomes easier and more efficient for them to come into the market, then you'll see more retail investor playing, but they're not at the mercy of institutional investors. I think there's a very important role that they play, and the easier it becomes that entry point for them. Investors being individuals in the top 30. So we see them now, but it starts with investors coming in and growing. So let me pass over to Eric.
To Eric, yes.
Yeah, thanks. And I think just to add on what you've said, and specifically for retail investors, I think historically, barring IPOs and for this market, we haven't had an easy way for access for retail investors, and that's what we're doing with HISA to make it easier for someone to invest with as little as, let's say for instance, 500 shillings and get onto the market. And what that does then is, once they are investing, once they are learning about the different companies, once they start understanding that again, for investment is not always coming in today and getting your returns tomorrow. Once they start long term, then you can be able to cross-sell the other products to them. Then you can be able to actually now layer on other additional services. But again, if you look at global phenomenons, I think from 2020 and 2021 with the GameStop saga and Robinhood, what did from a global point of view was to actually show that retailers can move the market. And as Mary is saying, just because it might be little amounts, but they have that sentiment in that they're actually able to rally, or they're actually able to then invest in teams. So the goal would be to find easy ways to make them enter the market, and that's both through access, education, also through stuff like fractionalizing investments. And I'm glad that last week we publicly launched at Nairobi Securities Exchange. The regulator is very to actually pushing fractional investments for Kenyan stocks, but also to stuff like bonds as well, because what that does, it makes it easier for retailers to come in with their little amounts and invest, and then eventually they're able to look at different asset classes. They can now actually start caring about what investing is as a whole.
Thanks, Eric. And just in case anyone has missed it, when he talks about the fractional investing, there are times you go to the market and you see a particular stock. One single stock is about 100 or so shillings, or 125 thereabout. And when you do because the threshold is 100 shares as a minimum, you don't even have that ticket size to begin with. So now this will allow an point for those who have the small tickets to be able to purchase those kind of shares. We have 10 minutes to go with this panel before I invite the Q&A. So let me come to Collins, and I know you don't hold brief for Treasury, but this question sits between you and Rebecca. So someone is asking, you're talking about retail investors and the opportunity in fixed income. What became of Emakiba? And I know you're not Treasury, but I'm sure you have a thought or two around it. Whoever takes it first. Rebecca, you want to go first?
Emakiba was actually a very good initiative where it was offering retail investors opportunity to own treasury bonds, and also marrying it with M-Pesa, where most of us retail investors are with, and that's how we transact. So what became of Emakiba?
Maybe what's the opportunity going forward? Because
I think there's a great opportunity, and certainly this new government is exploring those opportunities of offering bonds to retail investors. I think that's something they are going to explore in the next, probably next year and moving forward. So it's an exciting time, and I think especially for the retail investors who are here, that's because currently today, if you're investing in a treasury bond, you need 100,000 shillings to enter the primary market. The government sells what's called auction, their bonds every month. There's always something, like recently there was the infrastructure bond. So you needed 100,000 shillings. Now most people don't have that. So the fractional, Emakiba is the fractional, fractional investment in bonds. So I'm not at best to answer what the plans for the government are, because that's a treasury function, but I'm sure, I'm very certain, because we've held talks during various forums. As fund managers, we are part of the Market Leaders Forum that look at what bonds they are going to float, or rather float at the auction. So this is something they've been thinking about, and they want to involve retail investors in story for investment, and hence we are having this investor conference. So I think there's going to be such moving forward.
Okay, thank you for the question. Right now you can see that we have this crowdfunding. The policy is almost being finalized by CMA. So crowdfunding is just the resources together. It's just like a chama of where the investors, they are pulling funds through fintech, through technology, of whereby now they can able to mobilize, able to buy this bond at that fee of about 100,000 as the minimum requirement. So that is a policy which CMA is working on it, and also us as the Institute of Investment Financial Analysts, we're also providing advisory to the regulatory. Thank you.
Thank you, Sylvia. And as we get to the tail end of this, we have a question online here, someone is asking, do we have any regulations in Kenya around crypto? There's so much happening in the market.
Currently, there are no regulations at all on crypto. There are advisory pieces, obviously, from the CBK warning against crypto because as an asset, so to speak, we've not yet demystified what it does. But what I can say about crypto and digital assets and what needs to be in terms of investor education is just demystifying what it means. What is crypto? Is it a type of a digital asset? What's the technology behind it? What are the risks involved with it, etc. And of course, that's a lot of work for the regulator and stakeholders in that sector, so to speak. Hopefully, in the next few years, as other jurisdictions are developing their own frameworks, we'll be able to see stability in relation to this type of asset class.
All right, we have 5 minutes. Let me now take closing remarks. Let me start with Eric, flowing that way.
Thanks. I think the opportunity for retail investors in this market is largely untapped. And just speaking from a registry and CDS point of view, there is over 2 million CDS accounts. Again, that's against a population of, let's say, for instance, 26 million adults, but only about 65K are actively investing in the NSE, which means there is really a lot of work we need to do. Platforms such as these, forums such as this, offer a starting point for us to actually start engaging with retail investors, but we also need to broadcast this message beyond players in the space, so that then we are reaching the person in the streets, the mama boga, the boda riders. A few months back, we had the president at the NSE saying he wished the boda guy or the mama boga would invest in the stock market and generally just invest. And I guess the goal is on all of us, or the ball is in all of us. Nation Media, Business Daily, and also players in the space to ensure that then we're able to push the message beyond just this room and ensure that we actually educate people about investments and we're able to give them ways to access. And that's what we're trying to do at HISA as well.
Thank you. And again, I just want to confirm the sentiment that conferences like this are really exciting to be a part of. This was the first investor conference or conference targeted knowledge for investors. Some years ago, custody and registrars, we did the first conference, which now from the point of view of companies understanding how they need to address their shareholders and stakeholders, and this conference is now investors and what to do and understand. So to have discussions like this is really exciting. Also, to see companies in time trying to identify what are the gaps, what are the areas we need to address so that we can have active investment markets where investors are comfortable and able to invest across all asset classes and are comfortable to be able to start the process early with the information and the tools so that once they have the information, they're now able to access the different asset classes, understanding their risk tolerance, understanding how much they can lose, understanding how to get into the asset classes. So this is really exciting for us. And as Custody and Registrar Services, we're happy to be part of it. And we're looking forward actually to networking and further discussions coming out of this. Thank you.
Sylvia?
Great. A few short words. I think my takeaway from this panel is, and the discussions this morning, is just know your asset. Everything to do with it, including risks associated with it, the legal and regulatory framework, and of course, where you're not clear, seek engagement or seek advisors. It is critical. Yesterday, I was asked a question: is fees affordable in Kenya? And my answer was, you need to consider value for money. So if you're considering investing in a certain asset class or establishing a business, you need to ask yourself, my price point for this asset class is 1 million shillings. what do I need to do? What are all the attendant costs related to my due diligence, my legal costs, my advisory costs, etc., so that you look at it from a holistic perspective, and that way you'll be able to make the right decision.
Thank you very much. My closing remarks are around the investor, because most of us have come to listen as investors. And a lot has been said, starting with James Moria, who talked about economics and how they're affecting investments. So, and the fact that you're here, it means you're seeking knowledge. There's many more millions of Kenyans at home who don't have information. And I think that's the part we need to play as intermediaries, as media houses. And I thank NTV and media for organizing such a forum where we can, as intermediaries, showcase what we can do. My Anthony is coming after this to talk about what fund managers offer in that space. A lot has been said about retail investors, about fixed income, actually very good product, fixed income in the space of fund managers. You all know money market funds. If you don't know, there's a chance that you listen to that. So we need to educate a lot of Kenyans. And the final thing for investors, and I said it during, it's in the papers, this is your money. I've seen many investors have sort of like a separation between, you know, like when they look at their money or even health, you know, normal health, they don't really like own it, yeah? So this is your money. You are 100% responsible for it. So you need to invest a little bit of your time to educate yourself about what investment options are available, even starting from the basic, the bank, the M-Pesa, this is your money. So get to know, like, what is it offering? What are the risks of me putting my money in bank A, not bank Y? If I'm going to do a chama, who are the officials of this chama? Are they trustworthy people? Yeah? So just really take care of the fact that this is your money and make good decisions and come to, don't shy to professionals like investment managers, like lawyers, like going through a custodian or a registrar to buy your shares. Just don't shy away from the players in the market. Yes.
As Collins gets ready to give his final remarks, after Collins, I'll be taking Q&A. Any questions? I just want to begin mapping out. There's a question at the back there. If I could have a mic, get there. Any other? Another one here. So after Collins, we'll take those two questions. So let me get assistance in getting the mics there. Collins.
Okay, thanks so much. Yeah, for me is that you being as investor, you value, especially when you're going to invest. First is the value of the product, of which you have highlighted in the market, and also the trust. The trust is the key element. One thing the trust is that you have to ensure that the individual that you are dealing with them, practitioners, they are registered of the Institute of Certified Investment Financial Analysts, because we promote ethics and disciplinary action to these members. So that's my take. And also, one thing I can also encourage that what we need to do is that we need also to consider about our youth. Let us just encourage our youth for wealth creation instead of money poverty. That's my take. Thank you a lot.
Thank you. Wealth creation instead of managing poverty. For those shooting questions, remember one question, just keep it very so I will have a response from here. What's the mic? And introduce yourself, please.
Morning, everyone.
Morning.
I'm Samuel, probably the youngest guy around. Anyway, so my question goes to all of you, the panel, and maybe you guys around. When, let's say, like talking to startup founders, like when you're looking for investment, basically, you know, there's some investment, like generally, right now, there's a rise in risk-based lending, and also something like crowdfunding policy, bootstrapping. So when you're looking at, if your project maybe involves like something like AI, then you'll need, let's say if it's in cybersecurity, like for me, I'll need to take logs from banks generally because they're the most targeted. And also there's something like money laundering. Again, you'll have to take transactions from Safaricom or from banks and generally fintech. So when you're looking to talk, you approach them in such a way that, in a way, they don't exploit your idea because they have to take also, because you have to take data from them for training your technology. But then again, it's something that takes time and that takes time for research and development. So how do you basically approach investors? How do you approach if it's banks and thanks.
So thank you for that. Asking how do they get investor ready for capital raising. The second question, there's a gentleman here.
My name. Can you hear me? Yeah, my name is Ani. Now, I would like to pose a question to the members of the panel. If you divide Kenya into two sectors, urban and rural, you'll find the rural sector accounts for about 70% of the population and perhaps about 98% of the land area. How would you advise, how do we engage the rural folks to invest in the formal sector and also to invest in the land-based resources like agriculture, like minerals? That's my question to the panel. Thank you very much.
Thank you. The question of rural population and the land resource they have, how do we optimize it? Any other questions so we can take three? Go. Yes, there's a lady on this end.
Thank you. My name is Esther Mushai from Lion Asset Management, representing FMA with our team here, fund managers. I think mine is just a comment on the Emakiba. To the best of our knowledge, is that the uptake was actually poor because of education. The bonds asset class is not as easy to understand, especially for the retail investors. And I guess that is why I'm also excited, just like Kirian, to be here in this such a forum. And I hope we have many more of this to really educate the members of the larger community about such asset classes. So what happened is that, yes, the Treasury made it very easy for retail investors to access the primary market, but then this particular asset class is also competing with the likes of pyramid schemes and other asset classes out there. Our culture in our society is such that, especially for that cadre of investors, is you put in your money, you want your overnight riches here now and to get out of that asset class as quickly as possible. That was not possible, it's not possible in the bonds asset class. There is the interest rate risk that comes with it. So you have bought a bond at 12% today or last month. You want to get out of that asset class. There has to be a liquid market for it in the secondary market. It has to, the rates have come down for you to realize some interest or some capital gains from it. So uptake was poor, of lack of understanding. So we need these forums to educate retail investors on what really, how to take advantage of the bonds asset class. Even as we talk about the 14%, tomorrow rates go to 15%, the bond you bought this month will be underwater. So people need to understand that. Thank you.
Thank you, and I think that issue of uptake really affects virtually, if you look at derivatives, if you look at day trading which was launched, if you look at the real estate investment trusts, that's a challenge we face. Now, who's taking the question on investor readiness, capital raising, how do we present ourselves to those who own the capital without them stealing our ideas?
Yeah, happy to take that. So this is the way I'd approach it.
shoes of a startup that has limited resources and has to put in place protections for itself. One, already there are partners in the room that are willing to hold your hand, like Ken Invest. They have a flurry of support packages that they offer startups in terms of preparing you to start right, both in terms of establishment, but everything else you need down the line. I think the critical thing for startups to bear in mind, and I've had this experience, how you start determines how you're going to scale. So if you start with the wrong footing, where you don't have your establishment properly done, if you have concerns about your intellectual property and you don't have the right frameworks in place, then it will cause a challenge down the line. Yes, I understand that resources are limited, but from this room, I'm sure you'll be able to have partners who can support along that journey.
Any other takes on that?
Thank you. To add to that, for a startup, when you're starting, you have different options. So if you're looking at like private equity and investment, I really can't see that that's a different forum. But if you're looking at, trying to go the equities route, as mentioned by Sylvia, there's things there are partners that are willing to hold your hand. So, look into things like the Ibuka program. There are programs on the stock exchange for companies who want to understand what it would mean to list or to be a listed company without having the regulations as yet. So it eases you into it, and I'm sure there are others out there. So, I mean, you look at angel investing, that's a different asset, but if you're looking at equities, all of the programs and network here, but there are opportunities for you to be able to understand how to get into those markets, list in those markets, while protecting your company through proper agreements, etc.
Rebecca, you want to give a take?
Yes. Not to overkill, but she's talked about intellectual property, and actually that's what was on my mind. So the first thing is we're going to be approaching all these investors who can somehow steal your idea, and of course many have from experience. I think first engage a lawyer so that you can be protected. And then after that now, go to Ken Invest and you'll get all those opportunities, and then you can visit, you can get to know who can offer you capital. Then you have a better understanding of the best way, the options. Yeah.
Thank you. The second question was on the rural population and untapped land resources, and how they, or rather how can we ensure that we begin to optimize that as an asset? Who wants to give it a take? Collins?
Okay, thank you for the question. First of all is that investment is also regarding to the market. First of all, it's upon us to the market for the product of which they're going to solve for us. Then now from there, now we're going out to encourage them to do the investments. Thank you.
Eric?
Yeah, thanks. I think what we've seen happen is we've seen a lot of, let's say for instance, players sort of prioritize the urban areas over the rural. And that's just because of, I'd say, the returns. So let's say, for instance, if you land developer, or if you want to put up an apartment or house units, you'd obviously prioritize places which are urban, with a higher population, with a working population that can then be able to take up those units and in turn earn you returns. So I think that has been the case both from a retail point of view, where even for players in the investment space, they've focused on the urban population over the rural population, just because there is returns that can be earned from a mid to long short midterm. But I think you are right in a way that we need to have more capital moving towards the urban, the rural areas, and then sort of bring out the agricultural element in those areas. And the other challenge is that then there's not enough happening from a commercial agricultural point of view in those rural areas. So that means that there's not enough value extraction that can be gotten from those places. But we definitely want to see scenarios where there's more companies, there's more people investing in the rural areas to sort of be able to capture that agricultural value. But as of now, I don't think much is happening besides just the big corporations that are either, let's say for instance, running tea or coffee companies in those rural areas.
And just as well, I think one of the things which is being considered to try and address that challenge, I'm sure we've all had this conversation about the potential taxation of idle land. It's a conversation we've had before, it fizzled out, but it's now resurfacing for the next finance bill to see how that will be captured. Any other questions before we take our tea break? Let's take that gentleman and then we shall take a break. Sorry, I need a mic there, I'm sorry, Sam.
Good morning. My name is Ken Washira from Comfort Media. My question is on to the panelists. What's the future of investment and especially among the young people? Because we all seem to target the people who have money. We all seem to target the institutions, the individuals who are working, and very to those who have just left university because they have very little they can invest. And then we even education among those who are leaving university, the people who are earning 50,000 and below. We seem to target those who are earning more, of course, because they'll give us more interest and they'll make big investments. But the people we seem to put in place will be the one will be the one investing in our institutions 20, 30 years to come. But yet we seem not to target them because currently they are not in a position to invest. And some of them are being ruined to the pyramid schemes and other quick fixing or quick money making schemes. That's my question. Thank you.
Thank you. I think I just wanted to jump in there. That's a key point. Targeting that class was going to form the entry. And I want to say that we have conferences like this, the more we'll address that. But for us, I mean, actually, I wish my colleague was here, and I know she will be on later, and I hope many of you will still be here. But that's actually why we developed the shareholder to educate that class. So actually, we've held many what we call training meetings with board with chamas, and their interest in saying, now I understand the terminology, because just some simple things. We created some quizzes around terminology, things that they understand because we interact with the capital markets, but they don't understand what it means. So understanding the terminology then allows you to be able to understand what does it means, and you play related. It's a game, but there's information about trying to understand what it means to play in the stock market without losing your money, right? Because these are people that don't have a lot of money to lose. Then when they understand it, they get into platforms where they actually get into the market and play with their real money. But they've had a chance to learn the terminology, they've had a chance to play virtually, and then now they can go and invest. And those are some of the things, for example, that we are doing with the ShareHub app. And I think the more we have discussions like this, the more we will see solutions and products coming out to target that. But personally speaking, I hope some of you will be here when my colleague comes on, because those are some of the exact things that we're trying to target. Getting people to be comfortable and invest at an early stage, even partnering with educational investments. We're now looking at going into some educational investments and partnering with their business clubs, the university level business clubs, even as low as junior development. We're talking at that level, just getting them to understand the basics that they can, whether they're high school or university, getting them to try and play virtually, and then actually now go and invest real money, but understanding how much they can lose, what they're willing to lose, and how much they're going to invest in each class. So I think that's critical, and we're starting to see some movement around that.
Thank you. Rebecca, close for us with a quick take on that.
So, very quickly, so the youth, as we call them, because they're the ones who are leaving university, access to education, access to products. They resonate with digital. So most of us here in the room, as we are all getting into the digital space. Luckily for all of us, especially in FMA, we are, as fund managers, we are all digital. We've had stockbrokers, now they are digital. There are certain apps like HISA that are digital. So the conversation, not just to offer products, but market them. So yes, this forum is important. We need to have many more of these, especially the test ones, because the media, the media is a great tool to reach the masses. So investor education, where you bring these who are professionals, then and our platform on media, and then individually the firms, the companies that are in this have to continue with the conversation digitally, because these investors or these young people are on Instagram, they are on Facebook, they are on LinkedIn, they are everywhere. So you have to reach them there at that level. So that's a solution. Yeah.
And more important, on TikTok. I don't know how many of us are on TikTok here. Yeah, you need to get on that platform. Believe it or not, it's the new search engine. Forget about it, and I'm not advertising TikTok here. If you speak to the demographic around the youth, and we do that every time because we in the media are struggling with that digital transition, TikTok is the new frontier. Ladies and gentlemen, so much panelists. We really appreciate your insights. Thank you for the questions. It's been a very illuminating, fast session of the conference. We want to break for tea, and it's 22 minutes past the hour. So the time designated is 15 minutes. So by 10:40, let's be back here so we kick the latter session. So you're free to grab a cup of coffee or tea or something.
Just an announcement on where the tea is going to be. So the tea will be That's amazing. So now hold your imaginary violin and just do this. The imaginary violin. I can see people are feeling it. They're just like, So let's try one more time. Let's go. Back to violin. Again, let's go. So this one is just, what you're doing is you're also stretching your waist just to ensure that alert. Let's go. Because this is going to be the last one. Let's try add some energy. So let's you guys may have your seats. Thank you so much. Asanteni sana. Clap for yourself for participating. As you can see now, all of us are back to our seats. Tumekaa vizuri, and we are now ready for the next session. So right about now, we're going to be having a number of people who are going to come and give us some investor talks. And because I don't want to bore you with so much words, and also in the interest of time, introducing the first Fund Managers Association of Kenya. So ladies and gentlemen, help me welcome on stage Mr. Anthony Mwithiga. Tunaweza mpigia makofi? Karibu sana.
Told you know you are old if you blow on it or you hit it. So that's my generation. Good morning, or good morning, mid-morning. So I'll take us through a small discussion next 10 minutes about a matter of interest, courtesy of the Fund Managers Association. Sorry. Thank you. Apologies for that small hitch. So my name is Anthony Mwithiga. I'll speak on behalf of the Fund Managers Association. I'm one of the member firms of the Managers Association. I work at All Mutual Investment Group as Managing Director. So once again, thank you everyone for joining us this morning for this, high demand investor education conference. As all the speakers said this morning, we need to have quite a number of these so that we educate each other about the investment and industry, services, products, etc. So on behalf of the Fund Managers Association, I'll discuss with yourself okay, my slides are not moving. Okay. This is definitely not digital. So discuss with us those 5 items. It's important for all of us to know who are members of the Fund Managers Association in this room. What is our role in the investment industry? How are we regulated, licensed? And why should you trust us as your investment partners? Thirdly and fourthly, we'll talk about 2 key investment avenues or vehicles. One of them, which the younger people, is for the old folk like myself, pension schemes. And the one which is closer digital for the investors, unit trust. And then lastly, we'll talk about the common asset, investment asset classes, which my membership at F investors invest in. So the Fund Manager Association is a member of up to 15 fund managers in the country. Sometimes we call ourselves asset managers. Most of them are in the room. And the members are African Alliance Asset Management, Apollo Asset Management, ABSA Asset Management, CIC Asset Management, Corp Trust Investment Services, Dry Associates Investment Bank, ICA Lion Asset Management, Gen-Africa Asset Managers, Fusion Investment Management, Genghis Capital, Madison Investment Managers, NCBA Investment Bank, Sandlam Investments, and All Mutual Investment Group, where I serve. I know the members. You can just wave so that the audience knows where are you and want to talk. So most of the members are here, and glad to to you what they do. These are the member firms which manage close to 1.6 trillion shillings in funds under management on behalf of retail and institutional investors. And they're very shy. So today we've smoked them out. and kindly indulge them over lunch and ask them, what do you do for investors? But more specifically, what fund managers do, and in other countries they are called asset managers or managers, do many things. The purposes of this morning, they help advise both retail and institutional investors on available investment opportunities, capital markets, and even the private markets. They manage investment portfolios of individuals and institutions, help investors evaluate risks and returns features in all available investment opportunities, securities, and products. Of course, in partnership with other capital markets like security brokerage firms, stock brokers, investment banks, etc. The regulators, of course, CDSC, registrars, the NSC, etc. Again, being that they're investment managers, they are responsible to an individual and to an institution to assist, measure, and report investment performance of invested. Lastly, they help advise regulators on new investment trends they are seeing from investors, products and services. There was a cryptocurrency. So this is a community sometimes which is asked by regulators, to what extent are people excited or interested about some of these products and services? So we work very closely with the regulators. So how is the fund management industry regulated? So there are two core regulators. You know them very well. The Capital Markets Authority, or the CMA. This regulates fund managers through issuance to them of a key license, for example, the Collective Investment Scheme license, or CIS Unit Trust license. That's the license which allows managers to create and manage unit trusts. And we'll talk about unit trusts. Secondly, fund managers are regulated by the Retirement Benefits Scheme, Retirement Benefits Authority. They are called the RBA in short. These allow fund managers to manage and invest funds on behalf of pension funds or pension schemes by licensing them and also regulating them on an ongoing basis. And then lastly, the investment professionals in the investment industry in Kenya, as individuals and as member firms, licensed and looked after by the Institute of Certified Financial and Investment Analysts of Kenya, and they are here and they'll be to you, help train, register, and provide annual licenses to these investment professionals so that they remain in good order, and this institute monitors their behavior and make them provide good advice to all of us. Quite a regulated space, but for good reasons. The regulatory environment is actually progressive. We don't find it as a hindrance. And all these bodies are close partners of fund managers. So let me briefly talk about unit trusts. I've been told I need to close this in 5 minutes. Unit trusts as investment vehicles. For lack of a better name, unit trusts are the most common organized avenue for retail investors in capital markets. And they are, in simple terms, open-ended collective investment schemes targeting individual retail investors. Although we've seen institutional investors also invest in unit trusts. They are regulated by the Markets Authority through an issuance of a CIS or Collective Investment Schemes license. From a management perspective, unit trusts in Kenya are managed by CMA registered and regulated fund managers. So it's one of the things to know you're dealing with a reputable unit trust product. You should ask the provider to just confirm to you if they are licensed and regulated by CMA. And that's how you're able to tell a product is regulated or not regulated by the firm providing that product to you. The common types of unit trusts, there are many, but the 4 major ones which are popular are money market funds. These are funds which allow investors to invest and earn interest income as the form of the return. And these money market funds in short-term securities which give interest as the income. And the most popular, unit trust industry in Kenya in total is just under 160, 150 odd billion shillings, and 85% of those funds are actually in money market funds from all the players or funds managed by the fund managers in this room. We have fixed income funds, sometimes called bond funds. They are called that because they are the longer version of money market funds. We have equity funds. These allow retail investors to invest in the stock market, but indirectly through a fund which in extension invests in the stock market on behalf of yourself. We are lucky in Kenya, some of these equity funds don't not only invest in the Nairobi Security Exchange, but invest in the region, in other regional stock exchanges. And then we have balanced funds. These are unit trust funds which invest in a blend of the first 3 I've spoken about. But what is important for us this morning is why unit trusts? why are they beneficial, especially to retail, both young and old investors? Something which we believe as fund managers, unit trusts are able to provide is actually the inclusivity in investment regardless of size of capital or size of investable funds or monies an investor has. And I think the fund managers here will tell you they are doing drives talking to students in colleges and universities about this. So they provide low minimum investment amount as low as 100 shillings or 1,000 shillings. So extremely low investment amounts. They have no lock-up periods. You can invest today and get out on Friday. So they provide huge liquidity, if we may call it that way in our language. It enables you to invest and come out what you need, if that's your preference. They are professionally they are professionally managed because the manager of the product, the fund, or the unit trust scheme is an investment management firm who are members of FMA, properly regulated, having investment professionals to do their work. These products come with the tax incentives, but one of the strongest features of unit trusts, they give us the power of compounding of interest rates. So the interest earned today becomes capital tomorrow. So tomorrow, your interest of today also earns interest. And there's no powerful tool of growing wealth mathematically, if I may put it that way, than the power of compound interest. And unit trusts provide that. Again, as I mentioned earlier, one of the other key advantages of unit trust is convenient access. And I think this has been a challenge for providers of unit trust in the last couple of years because we've seen younger investors come on board. Convenient access via digital channels has been one of the key successes of that. And the members of the Fund Managers Association in this room who are offering unit trusts are able to show you their fancy apps on their phones, how you can digitally onboard. And you'll be surprised how efficient it is. And that's why I believe the TikTok generation should be part of this. So those are unit trusts. Common, but sometimes they can appear complicated. So sometimes someone will ask you, what's the difference between a unit trust and a money market fund? And the investment professionals here, especially the cheeky ones, will laugh. But those are the questions investors are asking. Simply put, unit trust is the umbrella scheme which the individual products, which we call funds, are contained. So the market fund is actually a product within a unit trust scheme. And I like the which given here this morning about terminologies and acronyms. The investment professionals are guilty as charged for also speaking on their own language, but we encourage these conversations so that you can understand our language, and also we also understand the investor's language. Secondly is another investment vehicle which is historically for the old folk like myself, but it should not be. If one of the advice I can give to a young person today, leaving college, 20, 21 years old, please join a retirement benefit scheme. That will be the biggest difference you'll do in your financial journey. You'll be able to save for more years and you'll earn a comfortable retirement. So matters of are no longer for dad, mom, grandpa, grandma. No, they are for everyone. And pension schemes in Kenya are extremely popular. Kenyans are saving close to 1.5 trillion shillings in pension schemes. So it's an important sector. And as a young person in school, don't be that. Ask your employer, do we have a pension scheme? What are the features? Can I join? Who is the fund manager? who is the custodian, who is the administrator. Let it not be a function of HR or a human resource. It should be for you as an individual. We are told here, let's own our money. So these are schemes or collective investment funds which are created by governments, by corporates, by private individuals to administer retirement savings, both to employed and self-employed individuals. Even though you are not in formal employment as an employee, you still need to belong and join a retirement benefits scheme, product, or fund. And they are available. The members of FMA here or the Fund Manager Association run these products. They should be able to help you and guide you if you're doing that. Even if you are a private entrepreneur, even if you are a startup, you should be able to get something which fits you. These are RBA or the Retirement Benefit Authority. They are managed by boards of trustees who appoint fund managers, custodians, pension administrators, actuaries, and accounting firms as service providers. Because these are special funds. They need to be in good hands. So the governance is more strict and more hands-on because these are monies where the savers need them at their weakest point in life when they work. And hence the regulatory framework is very tight and a very high level of governance. One thing we like about pension funds sometimes own cities, own towns, countries. If you go in East Africa, in every major cities, all those buildings are owned by pension schemes and pension funds. So they're huge. If you go to any of our East African exchanges, there's a likelihood some of the top 10 shareholders in all the listed companies are what? Are pension schemes. So they are one of the strongest institutional investors. But below them, there is me and you as members of those schemes. The common types of pension schemes, for example, in Kenya, we have national pension schemes. A good example in Kenya is the NSSF. We have occupational or employer-based pension schemes, individual schemes which you can join even though you are not formally employed, umbrella funds, which is purely many companies coming together and belonging to one pension scheme as an umbrella. The FMA members who are here can actually explain that further to you over lunch because they manage these kind of schemes. This can either be provident, means when you get a one big check, or they can be pension. When you retire, you get a smaller check, but continue income monthly basis for the rest of your life, or as long as you remain alive. I hope so. We all do that. The key benefits of belonging to a pension scheme as an avenue of investing is there are obvious tax benefits. Deductions towards pension schemes are tax exempt. So you lower your gross taxable income. There are contributions. Means you contribute as an employee and the employer contributes for you. It's a huge benefit. So young people, when you're busy negotiating for salaries, ask, how much are you contributing for me in my pension scheme? Why? That's almost, quote unquote, part of your income. And it should be a huge percentage of your salary, if possible. Professional management, again, pensions, I've said, are closely managed by a strong governance framework and by fund managers, custodians, pension administrators, etc. They are a key source of income upon retirement, and most importantly, they help grow the capital market. All of us as retail investors and institutional investors. Lastly, I'll talk about some of the Fund Manager Association or FMA advise investors, both retail and institutional, to invest. They are known by, this is government bonds or government debt or government securities through treasury bills and treasury bonds. The famous treasury bonds being bonds because of their tax benefit advantages. Corporate debt, this is structured loans to companies. They come in form of corporate bonds and commercial papers. The difference between the two is just the tenor or how long they take to mature. Commercial paper are T-bills by companies. They're shorter duration, less than 1 year mostly. Of course, we have listed or quoted shares or stocks at exchanges, for the NSE in Kenya. We have direct property, like the building we are in. Then we have REITs, which is like a unit trust of property or estate. We have private equity, which is investing in a fund which owns unlisted companies, or unquoted shares, which is investing in shares of an unlisted company. For example, this hotel, Sarova, is not listed, but if you own shares of Sarova, that's an unquoted stock. Mostly they are offshore products or offshore investments. To a larger extent, as fund managers, we give you access to offshore investments through global offshore mutual funds. Foreign unit trust investing in global capital markets. It's easier that way. But again, if you need direct exposure to stock at a global exchange, for example, in New York, if you want to buy Facebook shares, etc., Meta shares. We also in Kenya now have a lot of international securities brokers who can make that happen to you. But our as investment manager, investing through a mutual fund is best way to invest international and offshore. Thank you, and I'll stop there. The FMA Secretariat is represented here, and those are our contacts. Our head of secretariat is Pauline. That's our address. You can take a picture of that screen if you want to know more about the Fund Manager Association. Thank you again.
Thank you, Mr. And give it up for him one more time. Asante sana. Just a reminder that the hashtag for the day is hashtag Investor Education Conference. Hashtag Investor Education Conference. I have good news. I can see that we're among the top 10 trending topics for the day. So let's get it to number 1. Sindio? Sawa sawa? So keep tweeting, keep putting the hashtag on each and every platform that you are able to do that. Now, up next is from Gift Pesa. We will be having Mr. David Njiu. Let's give it up for him even as he comes on stage. Karibu sana, Mr. David.
Hi, good afternoon. So my name is Daniel Njiu, co-founder of something very different today. Just to take out from what we have been discussing about investments, I'll be mentioning to you something very different, and this is about Christmas, because we are in a festive season. Now, festive season is around the corner, and it's about gifting. And as a business person, either as a family person, you definitely want to cherish your loved ones. But now, how do you do that? Now let's narrow down for businesses. There are 4 main reasons why businesses reward. 1, you either want more business from existing customer or new business from new customers. And for your employees, you want to motivate them or so that they can be more productive. And lastly is your stakeholders, to connect with them. But now, how do you achieve that? How do you cherish them? The answer to that is a perfect gift. What are the qualities of a perfect gift? As you can see, a perfect gift should be either a quality product or access to quality product. It should also provide timely delivery. When you tell someone you're going to gift them, if you take 3 days, yet it was to be delivered, definitely you reduce the sentimental benefit of that gift. Now, what do we have in Kenya? Most companies, approximately 80%, they normally use supermarket vouchers to reward their staff. But now there are limitations. Number one, they are costly to distribute. If your staff are spread across the country. Number two, they are subject to loss. Sometimes you're given a voucher, you put it in your pocket. When you wash your trouser, it's mutilated. And of course, lastly, they don't allow they are not multi-use. If you're given for one store, you cannot go to fuel. So in 2018, we embarked to solve this challenge in Kenya. We are a startup, and therefore our approach was, how do you come up with a solution to fix this? So basically, we created one single voucher that is redeemable across 500 plus brands. That means the company gives you a voucher of 5,000. You can be able to shop, to fuel, go to a clothing store, go to a garage. I mean, choices are limitless. And this is a challenge to us today. Can we excite our staff at the end of the year in a different way? Of course, the features, as you can see, the voucher is multi-store. If you're given 10,000, you can go shop 2,000 in Naivas, go to a Shell, you go to Java, you go to, across our brands. And you can do partial redemption. So if it is 10,000, you don't have funds. And last but you can share with your loved ones. We are all sitting here. Imagine you can be able to send a gift to your mom back at the village on your phone. I'm going to show you that. Now, some of the top use cases we have is we rewards, definitely at the end of the year. We also have customer rewards when you want to reward your customers. And last, a loyalty program. If your organization has a loyalty program, you can actually connect through us so that we can loyalty program by providing a marketplace. Remember, we have 500 place marketplace. So let me give an example. KQ. Maybe accumulated points for KQ. But you can imagine how much you need to accumulate so that you can do redemption for a trip. But what we normally do, connect with the loyalty program, you're able to connect your points into vouchers that now you can go and shop. Of course, we have about 300 companies, as you can see, that are using our platform. And this is an opportunity for your respective companies that you represent to come and see how we achieve the gift. Definitely, just let me out. Yeah. So, yeah, quite simple. But of course, those are just the main brands. If you have a voucher, that is different places you can be able to shop. As I said, our company is called GiftBest. Of course, the marketplace are many. I just mentioned the main brands. Yeah, these are. So imagine you can be able to go to a salon, to a hospital, and so forth. And maybe to finish, what if we try today? Give it to your friend. By the way, you just dial that code. If you just dial that code, you can be able to give to your loved one, maybe a family at home. Yeah. Thank you very much for your time.
Thank you so much. Let's give it up for him one more time. Asante sana. I'd like to welcome on stage Diana Morioki Maina, who will also be speaking to us. Give it up for her even as she comes on stage. Karibu sana, Diana.
Yeah, I need help here, please. I know me. after hearing about gifts, maybe people are expecting me to gift something. Anyway. Okay, as we set up, how many have ever or know someone who has ever lost money through a fraudulent investment scheme? By a show of hands. Don't be shy. That's why I've added who knows someone, because if I say people often don't want to admit that they lost money, but it's good to just be honest. Honest is a virtue. So, yeah, I think we are good to go. So really, that is what the Institute of Certified Investment and Financial Analysts is trying to cure. I'm FA, Diana Morioki Maina, the CEO of ISIFA. I know people are wondering, what? If you're a doctor, you have to say you're a doctor. So I'm just acknowledging that I'm a member of the Institute of Certified Investment and Financial Analysts, and I am recognized by law to practice as a financial analyst. That's why I started by saying FA. Council member, Anthony. It's a way of advocating for ISIFA and membership and just awareness. When you hear someone saying FA, you high five and say, oh, ISIFA member. So we just need to advocate for our profession. So allow me to introduce the Institute, and I will take 10 minutes since I'm an analyst. And the Institute of Certified Investment and Financial Analysts, ISIFA, potato, however you want to mention it, is a professional body established under the Investment and Financial Analysts Act, which was enacted on 8th December 2015. And our main mandate is to regulate the investment and financial analysis profession and to register and license certified investment and financial analysts in Kenya, both in public and private practice. So you may wonder, what really is the practice of a certified investment and financial analyst? Defined under Section 21 of the Act. And the first thing is these are professional in the practice of investment and financial analysts. They offer to perform services involving investment advice. So anyone who is offering investment advice requires to be a member of ISIFA. And they're also involved with verification and certification of investment. So if anyone is offering investment advice or is telling you to join a certain scheme, you must ensure that the person involved in the investment of the funds, that's why the fund managers are our members, they need to be a member of ISIFA. So highly likely that whoever who advises yourself or someone you know, they must have not been a professional or a member of ISIFA. So we are the leading institute for investment and finance professionals. I'm taking it up because it's our vision. And our mission is to promote excellence and professionalism amongst our members and the financial industry. So there are a couple of functions under Section 8 of the Act, and one of them, of course, we need to promote standards of professional competence, promote investment research, the global recognition. We are advising the Capital Markets Authority with regard to licensing of investment and financial analysts, and we also advise CASNEB, who is our examination board, relating to examination standards and policies, and we also administer initial ethics and integrity tests before joining membership. So currently, we are 1,054 members. As I said, we are the leading institute in the investment space. We are the largest stakeholders in terms of investment professionals, of course, because we are the only professional body that has the mandate of regulating investment professionals. And where our members working, fund management, one of them. We also have corporate finance, investment banking, financial advisory, real estate investment, insurance investment advisory, sector, including the investment departments in the county governments and the national treasury. And I've just mentioned, whether it's public or private sector, anything related with investment, they must be members of investment, and also including private equity. So we might have some curious people who are wondering, how can we join? Perhaps you've already started offering investment advice. You know, the police is here. But we have categories of membership, and the first is associate, and these are persons who have undertaken the certified financial course by CASNEP, and they need to have less than 3 years of experience. We have full membership. There's the non-practicing level. They just need to have completed CIFA and have more than 3 years of experience. While the practicing, they need to have the CIFA qualification and more than 4 years of experience. And we also have fellows, the highest level of membership. We have renowned investment gurus like Jim Namba, Job Kihumba, who are all fellows of the Institute, and they're normally recognized in terms of their contribution in the industry. So we have our council members there. It's good to acknowledge them. Our chairman, F.A. Einstein Kihanda, who's also in the fund management field. F.A. Anthony Mwedega is a council member. And I'd want to acknowledge, I'm sure the ICIFA members, maybe you can wave. People will rush to you for investment advice after this. And also our secretariat team is here with us. So those are our council members. We have representatives from the National Treasury, CASNEB, the Nairobi Securities Exchange, Capital Markets Authority, as the institutions that are represented. So we are currently based at floor, CASNEB Towers 2. Feel free to pop in just around the corner. And I think I've given a good background about ICIFA, just to add the foundation of why it is important to seek professional investment advice. So the first thing, our members have undergone sufficient training and the relevant qualifications that are recognized by. Therefore, it supports the competence and the skill to provide professional investment advice. If you go through the syllabus, you'll see how complex it is. It's a professional qualification, and even the extensive years of experience our members have undergone, they're very competent and they're very highly skilled, and they still need to undergo professional development as ICIFA members. You know, they like to call them CPD, but it's very key. There's no way you will call yourself a pro and you don't undergo consistent training. And we must ensure that they undergo a minimum number of hours in a year to maintain their membership. So that's one of the key reasons. And the second, they need to uphold the highest levels of and ethics, given that they need to abide by codes of standards and ethics. And there are also disciplinary mechanisms in the Investment and Financial Analyst Act, where in case you have a complaint, you can always raise it, and they risk deregistration, and they also risk or being fined. So no one, you can see our members, they won't dare to compromise their career because of misadvice. So they have to be very careful when providing the professional investment advice. And I can attest the competence. A recent PS nominee investment promotion is actually our member. So you can see the kind of people who are our members and why it is very important to seek professional investment advice. And how do you know that you're dealing with our members when it comes to investment advice? We always gazette the list of in good standing. We are about to publish, I believe by December 15th, we should publish standing, so look out for that. We also plan to circulate it in the media. And you can always go to our online member directory at www.isifa.ke, just confirm that you're dealing with the right person. And you can always verify, send an email to info@isifa.co.ke. One of the ways that we are playing a role in investment and financial literacy, we have an investment show on our YouTube channel. How many have watched it? By a show of hands. ISIFA investment show. Well, there's a lot of information on our YouTube Institute of Certified Investment and Financial Analysts about the investment opportunities. We are coming to learn about what are the investment opportunities, and already that show has covered a lot because there are 12 episodes on that, and the first show is Investing 101. That's our chairman, Efeina Hicks, is host. I'm saying Efe so that you can know they are actually our members. And as you can see, the 12 episodes in some of the investment opportunities, the stocks, government securities, collective investment schemes, real estate, investing during the holiday season, an important one that now that you're in the holiday season, setting financial goals. A new year is coming, you need to set financial goals. Forex, venture capital, retirement, derivatives, insurance products and plans. A lot of information you can get here. Just 30 minutes per episode. I'm sure if you can put it in your playlists, you'll get a lot of information after this event. So just to wrap it up, from our member number 001, he'll say that, and this is also in the show, anyone rich or poor can put aside and let it accumulate. You just have to commit to setting aside a minimum of 10%, and you learn to live without it. So that's it for me. I've taken 10.01 minutes if I have extended. Thank you.
Thank you so much. Let's give a round of applause, ladies and gentlemen. I believe we have picked up one or two things from this. During lunch, I'll with any of the panelists, any speakers, and just get to know more about what they are doing. And because they're in the business of making business, I'm so sure they can spare a two and just fill you more. So right about now, because of time, we're going to have Mr. James Query from COP Consultancy come, and we're going to engage in a bit of a game. I've just seen the brief, and I'm actually excited to more about it. It's about building your business, I believe, yes? So because I don't want to preempt anything. So ladies and gentlemen, help me welcome on stage Mr. James Query.
Hello and good morning. My name is James Query from Cooperative Bank. Cooperative Bank has a consultancy arm called COP Consultancy, and we are the ones who will be facilitating the game that is on the timetable. The game that you're going to do about 1.5 hours is called IYB, Start and Improve Your Business game. Our country today has about 7 million SMEs. 1.5 SMEs are a bit formal. About over 5 million SMEs are very informal. And one of the enablers that will help these SMEs to become of age and, start becoming sustainable is knowledge. But now the knowledge that we share with SMEs must be customized so that it is easy to understand. This game, as you're going to engage with it, you're going to realize it's easy and it is helpful to SMEs. So because of time, we have a number of facilitators. We're going to set up 6 banking areas. And so I have 6 bankers who will be serving you. I want to ask them to stand up and position themselves. So every banker will be serving 3 groups. So we'll be positioning you. We'll need you to be in about 3 groups. Each group will have about 10 people, and every banker will be serving 3 groups. Okay, their position, kindly stand up so that we can see where you are. Good. So we have a banker at the back. We have a banker on that side. We have another banker here, there. Now, we are going to run a business today. Many times when you give people capital, say you give 10 million to, you come after 1 year, you realize that one of them has done very well, and then one of them, or a number of them will likely have depleted the money and gone into debt. Now, what contributes to that, especially when they're operating in the same market environment? We find that most SMEs are affected by very small decisions that happens on a day-to-day basis. And today we just want to look at how small decisions affect a business, and we'll be seeing that as follows. When we start, the bankers are going to give you a loan of $160 in your group. And this is the money that we shall apply in a short period of time. When we come to the end, we shall be checking how far you've been able to progress with your $160. Our business today will be manufacturing. And we shall be manufacturing a product called a standard hat. So I want to ask the bankers to demonstrate what we'll be manufacturing today. So a standard hat, we normally manufacture from raw materials. Our raw material looks like this. Material is sold still at the banker's place. The person who sells to you the raw material is called Harry's Wholesalers. So they're going to set up a place where you'll be buying some raw materials. Now, when you buy a raw material, your work as a business person will be to convert it into a finished product. So we're going to demonstrate to you how we'll be doing, or how we will be manufacturing. That will be your business. So bankers, wherever you are, kindly demonstrate. So generally, your piece of paper, you're supposed to fold a small line at the bottom. So just a small portion. And then the small portion, you will tuck it from the back so that you come up with a product that is cylindrical in nature. So this is a standard hat. It's more like what a chef would be wearing at Sarova Panafric. So the raw material, once we give you a loan of $60, the raw materials will cost you. Every raw material costs $40. When you manufacture the finished product, you'll go back to the banker. The banker has another section called Sally Store, and Sally Store will buy for you the finished product at $80. But when you bring it to him, he will test for quality. He will test for quality, because when you take a product to the market, it doesn't matter who you are, quality matters. So how do we check for quality? We check for quality of the hat by hitting it against the floor. So like the one I'm holding here, when you bring it to sell to me, I will lift what you have and then if it doesn't disintegrate, it's good quality, we buy. If it disintegrates, it's bad quality, we don't buy. Good. So I want to ask the bankers to quickly identify groups And if possible, you move people to 3 groups that you'll serve. Then I will give you instruction. Okay. If you are seated in a table where there is a banker, that area is now designated as a bank. So it's a security zone. We shall ask you to move from that table. The banker will show you where to sit. Probably you move to the next table. Good. When you move to your table, look for a paper with the title Business Psychochart. It should be placed on your table. Business Psychochart. Business Psychochart. The banker nearest to you can show you what it looks like. Good. Good. Now, the business cycle chart will guide us on what we shall be doing on a day-to-day basis. And on week 1, our cycle chart starts on a Thursday. So our business will start on a Thursday. Now, every day has unique activities, as indicated on the cycle chart. On Thursday is the day we interact with the bank, is the day we go to the bank. So as we start Thursday, and I'll be asking that every group get one person to go to the bank. So Thursday is a day for banking. We shall be giving you notes. See, maybe the bankers can show you the kind of notes we'll be giving you. You can demonstrate to them. So we have denominations from 100 downwards to $1. So Thursday is the day we go to the bank. When you start, the first day you'll be going to collect a loan, but on the next week, probably you shall have made some money, so you can go and deposit same day. On Friday, after you collect the money, on Friday we'll give you a minute to think of what to do with the money. Our experience working with many entrepreneurs is that when they get money, many times they don't know what to do. So on Fridays, we need to think of what you're going to do with our money. And there are 3 things we can do. Number 1, we can plan to buy some raw materials. I will tell you when you will do that. So you can allocate some money to buy some raw materials, or you can allocate some money to spend. Now, spending will happen on Saturday. I will tell you how to spend. So you can spend some money, save. So if I give you $160, you have 3 options how to allocate the money to those 3 things. So you can either do business, or do expense, that's spending, or save. Now, when do you do these things? On Saturday is the day for spending. So what you'll decide to do on Friday, the money that on Friday, you will spend it on Saturday. And how do you spend it? I want the bankers who are closest to the supermarket just to show it. So on Saturday is the day for going to the supermarket. We have a supermarket. Alex, you So the supermarket has products. When you go to the supermarket, you will decide what to buy. On Sunday, so you buy from, the banker is the one who will sell. Everything in the supermarket is sold in cash. On Sunday is a day for rest. So on Sundays, we shall be taking a break and rest and maybe do the things we do on Sundays. On Mondays, we go to Harry's Wholesalers to buy raw materials. So on Monday, we buy raw materials. And on your business cycle chart, it gives you a place to record how many units you have bought. Every raw material goes for $40. On Tuesday, the raw materials we bought on Monday, we convert them into products. So on Tuesday, we'll be busy making the product. And as you make the product, we assume that this is a normal day in the life of a business person. So there are things that will be happening. We call them life issues. I want to read you a sample of a life issue. So on Tuesday, as you're manufacturing, you'll be given a card. Like happened to you. Example. You were bitten on the leg by a dog while you were out selling. The doctor has treated you. Pay the doctor 30. So when the life issue happens to you, you pay cash. That's on Tuesday. So we make on Tuesday. On Wednesday, we go back to the bankers. That's where we have the person who buy. We call our Sally wholesalers. They'll buy for you the finished products. And that will have completed for us week 1. Depending on the time we have, we'll see if we're able to do about 3 weeks and then see how much progress we shall have made. On the last week, where we are manufacturing is a rented space. So on the last week, we will pay some rent, ad load. The rent is 100. And then any loan that you have from the bank, we'll also need to on the last week so that then we can see how much money you made out of your trading activities. So at this point, I want to ask every group to just give us one person. And that one person will come to the bank. So business chart. In our business cycle chart, today is Thursday. So go to your bank. The banker will give you a loan of 160 in cash. So probably what you can do, because you are many, you can get a name for your group. Get a name for your group. So when you're coming to collect money from the banker, you'll tell them your group name. So in the bank, we say you trust the banker, but you verify. So ensure you count the money. So in your business cycle, you have borrowed 160 from the bank. So on that day, please record that you have a loan of 160 from the bank. Now, you know banks don't give loans for free. So the loan you've just been given will attract an interest of 40 at the end of the month. The loan will attract an interest of 40 for the entire month. Because we also buying the materials at very good rates, so you'll be able to make money. So the interest rate is 25%. Of course, as a business person, when the bank gives you an interest of 25%, and there are probably other alternatives, you may consider. But for now, that's the rate. So now you have the money. So we move to the next day, Friday. So on Friday is today. Now we are on Friday. Plan for your money, 160. How much are you going to put in business? How much will you spend? And how are you going to save? So you have 1 minute to decide. Good. Most groups seems to have planned. So our day Friday is over. Today is Saturday. On Saturday, we spend. The money that you planned to spend on Friday, now, every group will go to Anchor where there is a supermarket. And in the supermarket, you are going to purchase something. So you'll check the products that are available and do a purchase. So today is Saturday. Let's go to the supermarket. So today is Saturday. Go to the supermarket and purchase something. The supermarket is located at the Bankers. So today we are spending. Note that if you do not spend, something will happen to you. For example, I want to read to you a card. I want to read for you a life issue that happens when you don't shop. So this one say, did you spend at least 20 on food last week? If not, then a child has to be treated at the clinic. Pay 20 for medicine and buy food now. Good. I think most of us have made the journey to the supermarket. So we are going to transition to the next day. Today is Sunday. Today is Sunday. So I'm going to request everyone to be quiet. Everyone, let's be quiet. Let's be quiet. So today is Sunday. We are not working today. It's Sunday. So the MC will help us spend our day.
Ladies and gentlemen, so it's Sunday. Please look in front. I know it's been a stressful week. Some people have spent all their money and we've not even gotten to Monday. So please look in front. Look to the front. So this is the activity for Sunday. I want you to close your eyes. One will still me. Close your eyes. So this is all I want us to do. I want us to take a deep breath. Breathe in. Out. Breathe in. Breathe out. Last time. Breathe in. Hold. Hold. Breathe out. Now we are ready for magic.
Awesome, awesome. Today is Monday. In our business cycle chart, Monday is the day we go to buy raw materials. Now, for this exercise, we shall only use the raw materials that we purchase. So you not make raw materials from your desk. So you come and buy raw materials. So today is the day to buy raw materials. Everything is cash. So today is Monday, we are buying raw materials. If the day ends before you buy raw materials, it will not be able to manufacture this week. And the raw materials are sold at a standard price of 40. Good. I see now we have raw materials. Today is Tuesday. Tuesday is the day for making. It's the day for making our products. So let's make our products today. So let's make our products a standard product as was demonstrated. Now, being Tuesday, this is life happens. So life will also happen to your group. It may happen today or next week, but life will happen. Good. Our Tuesday is almost over. But life is happening to a number of... When life happens to you, you cash. Good. So we have made our products and paid for life. If life happens, you pay cash. If you don't have money, you can negotiate to pay next week. So our day is over. Today is Wednesday. Wednesday is the day you go to store to sell your products. And as you sell, they'll be tested. So every product is bought at 80. Every product is bought at $80. So Wednesday is almost over. Ensure you've sold your products. Good. Wednesday is over. Is over. Now, ensure you're only transacting with one banker for the sake of our records. So today is Thursday. Finalize any discussion you have with the bank. So finalize the you have with the bank. Today is Thursday. So conclude your selling and any issue you have with the bank. Yeah. Good. So if you exceed the activities for one day to the next day, we are going to give you a Today is Friday. We've done Thursday. So Thursday was for going to the bank. If you have money, you can save. We move now to Friday. So everybody seated. Everybody seated. The money that you made this week, kindly plan for it for next week. The activities for Wednesday are over. So move Saturday and plan for next week. Plan how much you're going to spend on Saturday, how much you're going to put on your raw materials, and any saving you want to make.
So plan how much you're going to put in business, how much you're going to spend, and how much you will save. If you save in the bank, they will give you an interest rate of, they'll take your deposit at an interest of 10%. So today is Friday, you are planning for next week. And the day is all over. Good. Friday is over. Today is Saturday. Let us go and spend at Mike's Supermarket. Go and spend. If your group does not spend, life may happen next week. So go and spend. If you buy food on Saturday, food lasts you for only 1 week. Food lasts for only 1 week. Saturday is almost over. Good. Saturday is over. You have spent. Good. Today is Sunday. On Sunday we rest. No production, no negotiation. We rest. So it is Sunday. If you see your group doing something on Sunday, we are going to fine it. Good. Sunday.
Hello, so it's Sunday. Now, this Sunday we've gone out with family. So please stand up. Let's remove the tension. I know there are some groups, life has happened. And so since we don't want to get into the new week with the last week's stress, so this is what we are going to do. Something very simple. For the people in hills, you can simulate. So we're going to do something simple. So I'm just going to, when I say jump in, you jump in front. So let's do a test. Jump in. Jump out. Sawa. Jump in. Jump out. Jump right. Yeah. Now, do you know where your right side is? The mathematics has made you jump left. So now let's do the test one. Jump in. Jump out. Jump right. Jump right. Mulikuwa mnangoja ndarudia? Hey. So that's the game. So now let's do the opposite. So when I say jump in, you jump. So let's see if the math says. So you guys are investors. You're smart. Jump in. Don't look at me. I'm here to make you confused. Jump in. Jump out. Jump right. Jump left. Jump left. Stand up.
Good. Today is Monday. We go and buy raw materials. So buy raw materials. Good. Monday is almost over. So purchase raw materials. Monday is today is Tuesday. Proceed to make your product. Proceed to make your product. Proceed to make your product, and life will happen today as you make your product. Make your product as life happen. Today is Tuesday, we are making, and the day is almost over. So now we'll move a bit fast. So every day as I give you instruction, if you're late, it means your product is late, or you will not get a chance to buy raw material. Good. Tuesday is almost over. Tuesday is over. Tuesday is over. So if I come to your table and I find raw materials that have not been manufactured, we are going to take them away. Tuesday is over. Raw material that has not been utilized will be taken away. Tuesday is over. Today is Wednesday. Come to the market and sell your products. Today is Wednesday. Come and sell your products. If Wednesday is over before you sell your products will not be taken. So today is Wednesday. Sell. Sell your products, and Wednesday is almost over. We are closing Wednesday. Any material that has not been sold will not be accepted in 30 seconds. Ten seconds. Time is over. Wednesday is over. Any material that has not been paid for now be purchased at 60, not 80. Have you delivered yours?
Yeah, I have delivered.
Okay. It's only payment pending, eh?
Yeah.
Ensure you are keeping records of what you are doing. So if you want to negotiate anything with the bank, today is Thursday. Today is Thursday. You can for any negotiation you want to do with the bank. So today is Thursday. Clear anything, clear with the. So today is Thursday. I want you to refer to your business cycle chart. Refer your business cycle chart and go to the date indicated as 22nd. Go to the date indicated as 22nd. So we want to wind up. In your business cycle chart, go to date 22nd. Go to date 22nd. So because of time, date 22nd on your business. 22nd, it is indicated. So because of time, we will jump 1 week and go to the 22nd. So today is date 22nd. It is on a Thursday. So we are going to start a new week, which will be our last week. Our last week will start on 23rd. So today is Friday. In our business, it will be Friday, 23rd. So I want you to plan for your last week. This will be our last week of production, which will run from 23rd all the way to 29th. So note that in that week, coming week on Tuesday, you will need to pay rent of 100. And then on Thursday next week, you will need to repay the bank all debts. And then we shall see how much you shall be left with. So today is Friday. Plan for the last week. Be on Friday. Today is Friday. Good. We have planned for the last week. Good. Friday is over. You have planned for your week. Today is Saturday. Saturday, go and spend at Mike's Supermarket. Today is Saturday. Go and spend at Mike's Supermarket. We're 24. They buy on Monday. So today is Saturday, please spend. So purchase at Mike's Supermarket. It is the last day of spending. Good. I see most of us have spent on Saturday. We go to the last Sunday of the month. Today is Sunday 25th in our business cycle chart.
Just a minute.
So today is Sunday.
Hi. So, I'm back. It's Sunday, guys. So, this is what we're going to do this Sunday. We've come from church. You guys have already played with the family. The kids have gone to hang out with your friends. So, please stand up. And then this one, I need you to be in twos. This one, I need you to be in twos. So, get someone. And then me. So this one I need you to look at me. So now let's all face this side. Ensure that there's someone in front and someone behind. Now this is all I want you to do. Are you in twos? Tuko wote wawili kwa wawili? Like Noah's Ark? Thanks. So this is what I want you to do. I want you to just imaginary scratch the back of the person in front of you. And then mwenye sikia vizuri. Sawa sawa? Yes. You can touch or depending on comfortability. Tusitoke tusikie lawsuits. Suits zinafaa tu kuwa official. Then jump, face the other side and return the favor. Kama uko mbele sikia vizuri, sawa? Aya, let's try. 1, 2, 3, this side. 1, 2, 3, the other side. 1, 2, 3, this side. 1, 2, 3, the other side. Yeah, this is a very simple exercise. Ukishindwa, jumping is a problem. So now, I want us to try that with a song. Sawa sawa? So you'll start by in front. I'll cue you where you're doing it. So look in front and then just move side to side. So just simple, just like this. Awesome. Lift your hand. Moja moja. Awesome. This is a very fun-filled Sunday. Before Monday, Tuesday you're paying rent. And then this other wave. Awesome. Haya, tuko karibu kwenda massage kabla tulipe rent. Side. 1, 2, 3, let's go. And jump. One more time. Awesome. Let's try again. Let's try again. Let's try again. Let's go like this. So we're going to change the moves a bit. Watu wa cartoon, the cartoon called Johnny Bravo used to go like this. And change. And change. And then I know you guys remember this move. So it was just like this. And then we face that side. And go.
Full it up.
Scratch. One more time. I think you're ready to dance.
Awesome. Thank you, Bona DJ. Today is week. Monday we buy raw materials. Let's buy raw materials the last week. So purchase raw materials, it's Monday. Purchase raw materials. Good. Collect your raw materials. Good. All the raw materials have been supplied. Okay. So let us make our products. And this is the day that the landlord will come to collect rent. Rent must be paid in cash, otherwise the landlord will close the shop. So make the products. So today, make your products today. Kindly also rent. So make your products. So Tuesday we have 1 more minute to close the day. No, you will be fined because of business malpractice. Tuesday is over. Today is Wednesday. Go and sell your products. So the market is experiencing an oversupply. The prices may go down, but you can discuss with the banker. So today is Wednesday, sell your products. The day is almost over. Good. Finalize your sale. Finalize your sale and collect your money. Collect your money, collect your money. So the day is almost over. 20 seconds. Kindly close your cell. Close your cell. Then calculate how much money you owe the bank, because tomorrow we pay the fully. Good. The day is over. Today is the last day of our business cycle. Today is Thursday. Today is Thursday, the 29th. So calculate the money you owe the bank and go pay the bank. Today is the last day, 29th. We repay the bank any loan we owe the bank. Yeah. Pay the bank. Today we are repaying the bank, and we are closing everything in the next 2 minutes. So any business you have with the buyer or with the bank, you close it. Any amount borrowed from the bank, you repay at 25%. Clear with the bank. So the banker will come to check how much cash you have in hand. Yes, once you clear with, count your cash. The banker will come and find and record how much you have. Count your cash. Good, good. How much money do you have? Our result for the day will be the cash you have, and in case you have any savings from the bank, we shall also consider it. How much money do you have? So communicate to the banker who was banking for you. They will give us a summary in a minute. Good. Good. We want to get a summary of the groups. So our bankers will read out for us how much each group managed to make in the 3 weeks. And then we'll wrap up everything. All right. So thank you so much. I can see some people are very happy. Happiness is welcome in Kenya because many times they say we are a sad nation. So it's good when we're happy. I want to invite my colleague who will wrap up for us. Thank you very much.
Clap for yourselves. Is that the best you can do for yourselves? So we'll be giving some more claps to individuals, individual groups, and we'll also be evaluating how we did. It's about 1:45. We haven't had lunch, so we are going to make this session very fast. We're hoping that we'd have more time to share the lessons that we have each group, but we may not have that. But we have an opportunity to do that over lunch, isn't it? Yeah, an opportunity to interact as we share the lessons and the experiences that we have had. So if you look at these exercises that we've just done, it's a simulation of what actually happens in the marketplace. Does it look anything familiar to the people who are in business? But we sell, manufacture, or we add value. We save, we take loans, we pay the loans, we negotiate, we get penalized, we break rules, we pay. All that is supposed to happen in this game. So to summarize this session, let's first check how well we did. How much profit that we made. So we will test in 2 ways. First, you have a record that you are keeping. I hope everyone has been able to keep records because that's a very important lesson. In your business, you must be able to keep records because if you don't keep records, you'll not be able to track the activities of your business. So did everyone keep records? Okay, and you have an amount that you have captured in your record keeping. Then you had the cash. So at the end of it, James told us, count your cash and give that figure to your banker. So we want to see who made the highest amount of cash, which is your profit. So let's see, if anyone made above $200, please start. Above $200. All of us. Looks like not all of us, but most of us. Let's clap for ourselves. Let's sit down. Anyone who made more than $500 as profit, stand up. Let us clap for them. 1, 2, 3, 4, 5, 6, 8, 9, 10. Those are 10 groups. Okay, sit down. Someone wants to remain standing. If you made more than $800, please stand up. A good clap for them. So we have 4 groups standing. 4, yes. 4 groups standing. Please sit down. If you made above $1,000, please stand up. Wow, the same teams. The same teams. Okay, sit down. If you made above $1,100, please stand up. So we have three groups standing. Let's give them a round of applause. Sit down. If you made above $1,200, please stand. Wow, so we have 2 groups remaining. If you made than $1,500, less than, please sit down. Than $1,500, please sit down. So you made more than 15? Okay. If you, they will tell us. If you made less than $2,000, please sit down. So we have the winners. Let's clap for them. And they need to tell us how much they made. How much did you make? How much did you make? 2,060. Let's clap for them again. So we have people looking at them thinking, how did they do it? I had someone say, maybe they are laundering money. We need to investigate them. Wakokwa wash. So I think at some point we are going to ask one of them to come and tell how they managed to make such. I will call them. But before we go there, I would like us to also look at something else. As we were doing the manufacturing, I think we started with quality checks. How are they at the beginning? How are they? How many people got rejected? None. Many. So a lot got rejected. What happened towards the last week? We perfected, right? And I want to show you some samples collected. Remember, James gave us, let me stand here. James gave us the sample of the standard. But as we moved along, we got very creative. If this is yours, please stand up or raise up your hand. Oh, they can already see it, so stand up. Let's clap for them. It has some glitters around. So we have one that is branded. So branding was also involved. Sifa manufacturers. Sifa manufacturers, where are you? Let's clap for them. Then we have this. That is up. Please stand up. Let's clap for them. We have another one. Wow. Various different branding. Whose is this? Let's clap for them. Wow. This one is, what do you call this? Huh? Design, eh? Yeah. Which one is this? Let's clap for them. And we really made use of materials that we had around, eh? I see Mint Plus. I see Sun. I see, I'm not sure what that is, but let's clap for this. Are you? There they are. Then, again, making use of the resources that we have around. So that's also a lesson, eh? How can we utilize the local materials that we have around? It came at a cost, didn't it? Okay. Then, it got even better. The delivery. So there's a team that even did a package and delivered their products. I think they're at that corner. Which group is this? Let's clap for them. It got even better. Another one decided to ship their materials, so they manufactured a boat and delivered their product. So I guess these must have gone to an export market. There are opportunities there. And then we got these. Who are those? Let's clap for them. Yes. So again, packaging of your product matter. So those are some of the lessons that we've been able to pick as we moved along. Let me check, I think one more. We've talked about quality negotiation. I saw a lot of negotiation happening. I was privileged to be able to interact with all of you. So I saw people negotiating on, what did you negotiate on?
We patented our product. We also used recycled material.
Wow. So you got a better price?
Yes, we did. We sold that.
So I saw people negotiating. 20. I saw people negotiating on cost. What was the lowest cost you bought any material at? 40, 35, 25. So your negotiation skills. Remember when we were starting, we said we are selling materials at 40 bob and we are buying products at 80. But we got people spreading that margin by how you negotiated. And I even saw people negotiating on the interest rates with the bank. Did you know you can negotiate with your bank and get a lower interest rate? Get a lower interest rate for your loans and also get a higher interest rate for your savings. Did you know that? Yes, even banks are approachable. And life issues. We need also to plan our lives, balance our lives, because things that it's not about business. People will get sick, so plan for that. People will die. You need to buy presents for loved ones. So it's also important that you plan for that. Is there anyone who got penalized? If you break the rules, you will get penalized. And that happens in real life. So allow me to just call the team that made the highest profit to tell us in 2 minutes. One of them can come. One of you can come and tell us how did they make it. And then we'll get the next instructions if we are going for lunch now or later.
The team that won, please, one person to I know people are hungry and angry, so yes, kwanza wenye wamekasirikia banka hapa. Nimeona hapa banka feature, so I have no idea what you did.
Okay, how we won is that
Listen to strategy.
okay, first we did the project. So we were like, this week we are going to sell how many. So we started from the end. And then when we went to sell the first batch, we did with the money, so we sold at 80 bob. Then we did 6 and sold at each 200.
Musikasirike banka, kasirike mwenye alinegotiate.
There was the value add. There was the value add. We offered years to go, warranties and all that. And then for the third batch, we were able to purchase 29 of them. Then we folded 29, but 6 were rejects. But then we still negotiated on the price. She gave us at 80 bob.
Okay, and I was told also there is a team, I don't know if it's the same team that said that they are going to provide a sales service. They are going to provide a staff on site so that if there are any defects, they can deal with it. You can, it is as good as how creative you are. I had some people saying, unfair. You pay 200. Imagine life is unfair. It depends on how hard you push it. So keep pushing. Keep pushing. When you go to the bank and they don't give you a loan, go back again. Or go to another one. If you don't, you need to buy material, what do? Tell your supplier to pay you, to give you on credit. You will pay him when you sell your product. You don't have to say, I don't have money. And by the way, money is not the biggest resource in business. I hope you know that. Even the guys you're sitting here with, the networks you create today can be a very big capital to take your business to the next level. James said we work at Coop Consultancy, a subsidiary of Coop Bank. We offer very many services. That's not the only service that we offer. Businesses do strategies, prepare your business plan. We also train you on business management, areas of business management. If you're a member of a SACCO or a director of a SACCO, we work with SACCOs a lot. That's our core business. So you can also talk to us about your SACCO. So any issue that you may be having about business and you need advice, you can talk to us. And we also work with donors. So sometimes you might require consultancy services, but if you can't afford to pay, or you'd like to pay later, so you said you can still get service without having money. We also work with donors who sometimes would get funding to support small businesses. So you can talk to us. So hope to interact with you more over lunchtime so that we can tell you more about us. For those who want to invest, we have Coop Trust Investment. They are represented by Samantha. Please, Samantha. Yeah, she belongs to another subsidiary of the bank, Coop Trust Investment. You can also see her if you need any investment done for you. Thank you very much.
Let's give them another warm round of applause. Now you probably know why your competition is making more money than you. Yes, the commodity is the same, lakini chai ya Java na chai ya kibanda sio same, si ndio? Majani ni ketepa bado. So for the people who are asking, that is a classic example. That's an oversimplification, but at least you get the idea. So let's give it up for the top team over there. Let's also give it up for the guys, the Coop Consultancy guys, for keeping us engaged for the past couple of minutes. And so now we're getting to a point where if you're at least food is medicine to the stomach. So ensure that you have your meal vouchers. I believe that Jalang and Mary have them in case. So please raise your hand ndo watu hawajue. So yes, In case you don't have your meal vouchers, you can just go to them. Also ensure that you go to the booths and just check out what products they have to offer. Interact with them, get to know more about products. If possible, do business with them. Sawa sawa? Yes, lunchtime is the best time to just get to know why they're here. Sawa. I may not be able to do service by just saying it step by step. Plus, on top of that, I know you guys will kill me if I spend more time here. Yes. And with that, also just remember to keep the hashtag going. Take as many selfies, as many photos, as many as possible. And so with this, ladies and gentlemen, we'll be taking a 30-minute lunch break. Then we'll be coming for the afternoon session. And yes, you're free to have lunch right now. Karibuni sana. Last time. Now move number 3, let's go. And lift. One more time. And lift. One more time, let's go. And go. Last time. Now just to turn down, just lift. Awesome. Amazing. Clap for yourself. You may have your seats. Giving it back to Julians, who will be taking us through the plenary session.
Many thanks, Samuel. Thank you so much for that. Ladies and gentlemen, we want to get into our second panel for this conference, where we will be having a two-sided conversation. One will be focusing on the aspects of real estate. The other will be focusing on aspects of equities, and that is really defined by our panelists. So let me invite on set, we have Shara from Superior Home join us. We have Solomon Zoma from Santa Marie. I have Solomon Kariuki from AIB Access. And I also have Robert Ochieng from Abojani. So gentlemen, welcome on set. Let's give them a round of applause as they come, please. Robert, are you around? As well as Solomon Kariuki, he's making his way here. Actually, both of them. Karibuni sana. Mic check. So two of us here, actually, two of them skewed on one side are real estate skewed. Two on that side will be dealing largely with equities, I believe. Yeah. Fantastic. Great. So, and why it's important we have a conversation around real estate. And by the way, I have watched about 50 minutes by the program. I with 40 because of the interest of time. Let me start with Solomon to my right. And I start with Solomon because real estate, if you speak to Americans, they believe it's a where we must all have a stake. We need a piece of that pie, but they will tell you that we keep on getting scammed in this market in one way or another. So today we're dealing with legit guys here. So Solomon, if I'm scouting for a housing unit, and for this discussion's sake, because we're told about 80% of Nairobians are on rental basis, we are looking for purchasing a unit which you can put on rent for rental yield. What are some of the things I should be focusing on from an investment optic when I consider that?
Thank you very much, Julians. Start off with the first part. And when it comes to investment, the first thing is to, first of all, understand what are your objectives and what are you trying to solve with this particular investment, because then that determines what you're going to do next around that particular front. After you've identified what it is you want to do, and in this case you've decided it is real estate, the next thing is to look at what kind of real estate are you looking for. So it could be units, could be land, could be commercial space. So there are quite a number of asset classes that you can invest in within that category of real estate. From there, the next most important thing is to identify who you're partnering with. I think we are all aware real estate is a really capital-intensive venture, and it's you have to size your pocket and don't bite more than you can chew, lest it pulls you down and destroys you completely. So then you have to decide which is this particular product. We've identified it's let's say it's a unit that you want to take into. This particular unit, I don't intend to live in it, so it's a unit I intend to rent out. The next most important question to ask yourself is, who is my customer? Am I looking for a high-end unit? Am I looking for an affordable or a low-cost unit or a mid-market unit? And then from there, you just go to the next stage of identifying this project. And most importantly, who is your partner in all of this? And that is where most Kenyans have felt the brunt of the market, where they have dealt with what I will call scrupulous developers who will put up a building, and in no time you're receiving that dreaded call by your caretaker that boss kuna makosa imefanyika. At that time it's a whole building coming down and your investment has gone down with it. So you have to really choose which partners you're dealing with. And lastly on that is the question of yield, because ultimately it's an investment product and you have to make money out of it. So real estate gives you two opportunities. One is the rental that you make, which in investment circles will term it as a yield. And secondly is the capital appreciation. And that's the appreciation of value over time. So if you buy a unit today for 2 million shillings, in 3 years, 5 years, that unit is not worth that 2 million. It's worth 5, it's worth 3, depending on the location and what have you. So all in is that total return element. And most importantly is to realize that real estate tends to be illiquid. It's a very long-term investment and a very good place to preserve capital and a place to be able to pass on this capital to the next generation. Because if you leave your kids a building, the worst they can do with it, unless they demolish it, they'll just continue. Even if they squander the rent, the value is still protected. Yes.
Thank you, Nzomo, for that point. And I should say that Solomon Nzomo here was actually my undergraduate roommate when we were starting.
Thanks, Julian. I think, firstly, I agree with almost everything, actually everything that Solomon said. Real estate's an illiquid asset. You've really got to do your work with understanding your yield. The only thing I would add is you've got to compare it to almost what is your quote-unquote risk-free instrument. It's become challenging in a Kenyan environment because real estate, along with any other asset classes, including equity, private equity, has been put up against interest rates that are very, very high in the economy. So you're comparing a rental yield, which traditionally in Kenya, being a rental economy with the supply of people looking for rental accommodation, yields have always been suppressed. If you're looking at residential yields, it's about 5 to 6%. Commercial yields, if you're lucky, 10 to 12%. Then capital appreciation is obviously there, but you can get the same capital appreciation in trading as well. So have yields been squeezed over the last couple of years? We've actually not seen a squeeze. I think what we have seen is an increase in the differential between real estate yields and risk-free government instruments. In any sort of rising interest rate environment, and we don't expect interest rates to go down anytime soon, there has been an increase in that spread between yields and your risk-free instrument. And that's what's caused a lot of people to their head up and say, oh, hang on, this capital appreciation that I thought I was going to get in the market, I'm no longer getting. Yeah. But my yield is pretty much known. I think where there's another aspect that people forget is there's costs to maintaining this property, right? They've got service costs, you've got utility bills, you've got to put aside money for maintenance. And if you don't keep reinvesting back in your own units or your own real estate investment, ultimately you're going to suffer because you'll either lose a tenant, your yield is not going to be as attractive anymore, you're not going to be able to command rental appreciation that you would have otherwise got in the market. So it comes back down to investor education. The same way when you're buying stocks, you understand that, look, I'm going to have these closing costs, I'm going to pay this brokerage fee, I'm going to pay this commission. I think a lot of people in real estate just look at, maybe just the cost of the unit, but forget there's stamp duty, there's registration, there's legal fees, there's service charges. So it's really working with a trusted partner who will tell you, number one, here's my track record, here's my due diligence, here's what I've been doing for the last 10 years, so please buy. You doing a lot of due diligence yourself, and then understanding sort of where the yields are against your expectation.
Great, and that point of now the comparison between the risk-free instruments, and by that we mean the government paper, and what we have in other asset classes. Now let's wear a different hat, and let me come to Robert. If you look at the equities, the stocks, we are looking at knocked down prices. Many would say almost at basement level. Some have argued, well, the attraction is that the entry point is quite good. Do you hold that view?
Yes, I do. And just to expand the conversation, basically at Abojani, what we do is we provide a platform where people can get financial education. And it's quite interesting that it's something that so many people talk about. People in the industry are doing it. So we decided to go for what we believe is the biggest problem in the industry. So what we've seen is that even before we come to equity, see in our banner there, we talk about 12 personal finance value chain, and then we collapse them into two. And we find that most Kenyans, if they can have two baskets, so one is home ownership and the other one is for financial freedom, they'll be happy. So even when we talk about equity, we need to connect with them and tell them how that will help them. If they want to own a house, how will investing in equity help them to raise that capital? If they want to be financially free, how will that help them? Then money management skills will come in where they start managing their money. They have an emergency fund, which actually buys you the peace of mind to even be able to have the luxury of investing in the stock market. And once you're at that place, then now you'll be able to take advantage of opportunities that you have currently, where you have some blue chip companies that have very high dividend yields, and they would be considered as growth stocks because the profits are growing, balance sheets are growing, and the company is giving you a very high dividend. But I think it's financial education or awareness that will be able to help you see that opportunity. So from an opportunity point of view, say yes, there is, but is they armed with the education to be able to see that? Yeah, so that I think is the challenge you have in the market. But I would say these are some of the best times for people who have excess. So usually excess is the best thing that we should be preaching, that when people have excess, that's only when they can be able to look at investing as a long-term thing. If they don't have excess, they'll be worrying about what to eat at night. So investing will be a luxury. So we need to expand the conversations, help people, more people get jobs, help people upskill, help entrepreneurs with the ease of doing businesses so that when they earn more money flowing into capital market.
Right now we are in the basement in terms of the opportunities for the equities market. And is it a good time to come in? Yes, it is. And you see, for retail investors, in this case I'm going to focus on retail investors, you find that they're usually at an advantage, one, because there's not enough information. Generally in the market, most of the time the information is not readily available for them. And then you also find that the lack of information then makes them not aware that the minimum investment you need is 100 shares of any company. Now, if you're going to talk about that, at the current prices of, let's take the example of the most commonly talked about share, that is Safaricom. It's trading at around 24.5, 25. Yeah. So that means you would need around 2,400. So how many of us in this room, in one weekend, do you spend 2,400 on luxuries? I won't tell the luxuries, you know them. So how many weekends do we, or even on a weekend, or even on a day like today? So there are those opportunities. As Robert was saying, the investors lack the knowledge about the market, one, and they also lack the knowledge about the available opportunities that are there and how to take advantage of them. And the third one is, from even when you were growing up, we always knew that investing in the equities market, you filling a pile of paperwork. You get a letter from the chief, have to go to the bank, it's stamped by your bank, take back to your broker, something like that. But you see, with advancement of technology, then you're able to have modern ways of investing that are convenient and accessible to anybody. Now, in the case of AIB DigiTrader, whereby you're able to download the app, within a few minutes of signed up, CDS account is open, you're able to transact your shares. Now, I feel like the transmission of that mechanism from investors knowing that the market is there, the opportunities are there, and it's easy to access them, then they can take advantage of the current low trends in the market. Yeah.
Thank you. I want to pick some questions from online, so I just put out something before I started this panel. This question goes to Solomon Nzomo here and Shiv. Are there genuine developers in the market? We have taken our pensions, put in real estate, and we have nothing. Solomon, let me start with you.
Yes, there are genuine developers in this market, and I can proudly say Centum Real Estate is one of them. Let me take that opportunity. As I said earlier, and as one of my colleagues mentioned here, there is that not understanding why you're doing a particular thing, and that is what has led many people into many different problems. In finance and generally, there's a proverb that says you don't put all your eggs in one basket, and that is what has really caused a lot of trouble for many people, for no fault of their own, maybe lack of education on that particular front, where you are retiring, you've gotten your pension from NSSF, say 5 million shillings, and you've risked that whole 5 million shillings in one particular product. In the downside event, which has happened actually, that investor goes down, that developer goes down, and for also no fault of their own or because of certain market dynamics, which were also beyond their control, then your investment tends to go down without it. Probably now going back to investor education, my colleague was talking about, if most people were educated to be able to understand that you need to run a diversified pool, and real estate happens to be one of those asset classes to invest in. So if 20% of your portfolio is in real estate, even if that developer goes down, it's only 20% of your portfolio and not 100%. So it does not become a catastrophic event and allows you time to build up. So in summary, there are genuine and credible developers in this particular market who've done quite well and have delivered quite a number of projects. Many of us as well don't do their due diligence. When we are sold what we think is a deal, we are very fast to jump into it without doing all the necessary due diligence. And some of these problems that we found ourselves in are probably brought to our own self. Yeah, okay. So I can say. Yeah.
Shiv, to rejig that question, when the two of you keep talking about due diligence, what are some of the check boxes then I should look for?
Well, I mean, just to come back, there's definitely genuine developers in the market. And the challenge with the Kenyan economy is that we've sort of been plagued by more bad stories than good ones. And we're really hoping that the narrative changes, because it's important for development of any sector, especially when we're trying to, what I would call, institutionalize real estate and make it an investable asset class. What are some of the check boxes? I think the easiest one is to look at due diligence. Is to look at someone's track record. Have you visited any developments that this developer has carried out? Have you actually gone yourself? Do they use a credible lawyer? Is the title there? Is there a credible management structure that puts in place the governance of the development? Are the shareholders behind, and do they stand behind the developer? Is the board visible? Can you interact with a management team? Are you taken through an institutional process when you're purchasing? So I think a lot of challenges come with people not seeing actually what they're buying or what they're investing in, or even understanding what's the underlying instrument that I hold. Is it a title? Is it a lease? What is this going to cost? What are the repercussions if I don't do what I'm supposed to do? For example, if you buy a plot, it comes with a condition, right? You must develop within a certain time. We have a habit of buying things and then not reading what are the terms and conditions that accompany this development. But I think we're going to see the trend change. This basement equity pricing, squeezed yields, it comes in the backdrop of a very challenging economic environment globally. And if we have to look at ourselves, we're probably better off than a lot of economies around us, including those in Europe and in the US. So there's definitely going to be challenges, but I think what we are seeing is more institutionalization of the real estate sector, and we're seeing a lot of weeding out of developers that would ultimately have caused people a lot of problems. And sometimes, it's unfortunate to say, but sometimes that sort of a shift is needed in the economy where, it takes time to just get rid of all of this and then move forward in an institutional manner. When it comes to pension funds, other than just investor training, I think pension funds need trustee training. Trustees make decisions for pensioners, It's always unfortunate. It really hurts when that's pension money. That's someone's saving, someone's retirement. That's what someone is going to go and live the rest of their life with. So there's a lot of need for trustee training, and I think that's where RBA, CMA, ICIFA, everyone needs to come in and really take a look and say, are trustees making informed decisions on behalf of pensioners? The issue is not the pensioner themselves, it's who's making the decision on their behalf.
Okay, thank you for that. Robert and Solomon, a question in similar fashion, and this person is asking, for those of us who bought shares of company X, name withheld, wait, let me get it back here. It's here. For those of us who bought shares of and is now nowhere to be seen. So basically, the way the market resets, is there hope in the stocks?
Yes, there's hope, and I think it's part of learning. What I would like to encourage retail investors is to know that personal finance matters, is part of your life actually. Sometimes we are consumed in our businesses or careers to the extent that we think that they are life, but you'll realize that the money can replace that career when the career is not there. So because of that, we need to also have personal finance and investing as life partners, just the way our careers and businesses are. So for that reason, just like you've taken a lot of years to learn about your career, about business, people talk about 20 years in business, 20 years in their career. I tell you that does not. So is part of investing to know that sometimes some things will not work. That has happened to me personally. And like you've said, even within equity investing, try to come up with a way to diversify your portfolio. So generally you'll have opportunities for growth. So growth is where the like let's say today there's a new technology and there's an upside potential, like the mobile money has been, or telephony, and it's something that matters in the economy. So you can ride along and grow with that. There's also value opportunities where the stock market is undervaluing a company that is doing very well. And again, there are companies that are doing well and they have dividends. So there's also sector diversification, like regional play. We've seen some banks doing very well outside Kenya. So try to have that sort of diversification so that you can stay grounded and guarded even if a few of them don't work. So I'll give you a practical example. Like in the year 2005, I trained some bank staff on Microsoft Office. Believe you me, if you had those skills, no one would retrench you. But now probably that's not the required skill. So what it means is that you also need to be upskilling yourself in your investments. Things change from even a regulatory point of view. So keep yourself updated, and also accepting that things have not worked, that the investment has not materialized as per your analysis is also part of investing. So just give them hope that even with that situation, still look at the opportunities that are in the market. I think what happens during a recession or tough times is that the blue chip companies that are well run, they're able to survive these tough times. So they are well grounded in terms of the balance sheet, which is, I think, is another education that we need to tell people generally what education is, what a commercial entity is, because there's been a wave of where people are saying that to be an entrepreneur these days is how much you've raised. But businesses survive because of what we call earned equity, which is part of retained profit. How robust your balance sheet is. It's not on contributed equity. Even if you raise capital for a business, we won't say that that is success. Success is how it uses that capital to generate more. So please look at the balance sheet and see that, because those are the companies that are able to weather the storm and grow into the future. So balanced portfolio, but accept that some investments won't go our way.
Thank you. Solomon, there's a question, recurrent question around typically what horizon should we be looking at in the stocks?
Okay, maybe I can add something to the previous question before I address that, or maybe match them both. On the previous question, because company X, so I'm going to answer it in two ways. So the first one is, I'm assuming company X is one of the companies that we have, the listed ones, that maybe come under financial distress. They're in liquidation, administration. So some have not even published their financials in a few reporting cycles. So for such kind of companies, you have an option of cutting your losses into another form of investment. Yeah. That's the most honest conversation you can have. You say kujita mkutano. So you say, I made the investment company at that moment. I knew this and this, but things have changed. And I don't see any way forward for this company, apart maybe from liquidation, or there's no recovery path for this company. So what I can do as a shrewd investor is cut my losses and move my investment somewhere else. The other option is you can be patient, and because some of them are taking actions to try and come back to life. The other way I would answer it is assuming company X is a fundamentally strong company. It's a company that is religious in terms of profit making and dividend payment. So this company could be declining because of other factors that are beyond its control, or maybe investors are not really praising it as it should be. So in such a case then, what I usually advise my investors is make sure that you first understood the business of the company, because most people invest in a company because of the name. I hear company X, company Y, they do this, or I see a lorry passing near my home and it's I like it. Okay, so you need to understand what the company does, how they do their businesses, their business model, and that now comes back to investor education and understanding the company. Now, if you believe the company is good, but the market has not priced it well, then at that moment, then I advise my investors to buy more of the company, bring down your average price, then monitor it. Then at the moment whereby the price comes to near your average price, then you can know that you've broken even on the initial investment. In terms of the horizon, I usually also look at it in different ways. Now, like a young man like me, my horizon is big. I would say I have another maybe 40 years to get to Kimani's age, Mr. Kimani's age. So for me, my horizon is big. And the reason that is because for me, even if I was to invest in the stock market and take a loss, I would say, assuming I get to his age, then I have a lot of time to recover. Unlike maybe Mr. Kimani, if he was to invest today in a company and then he loses his money, then you know of the case I think in the papers a few days ago, where a man lost a few thousand shillings in a few days. So for the main encouragement from him was, I'm going to come back stronger at the age of 60. So I would say the horizon or investment horizon largely for the equities or stock market is largely dependent on your age. So if you're a young person, then you should take a long-term approach, and that would then tie back to the first question. So if you're a young person and you did that investment in company X and it hasn't paid off, it hasn't gone well, then take the long-term approach and say, I'll be patient and then I'll wait and see where this goes.
Okay.
Yeah.
Thank you. You've reminded me, speaking about cutting your losses, one time I held a stock as it kept on tumbling. And my wife reminded me, they're just shares, it's not a marriage, so you can cut your losses anytime. So we come to Solomon, and really, Shiv, the question coming in is, do we still have that place for to own in this market?
I come to you as Superior Homes, where we used to have a rent to own, but it's slowly being phased out. There's an opportunity for it, and we used to offer it ourselves as well. But then you find yourself moving sort of from your business of core real estate development towards almost like a cash collection agent. So these days we like to pass on that risk to the bank and tell them you deal with the collection. It comes back to a cultural issue, if I can just speak honestly. People will miss a rent to own payment because they know as a developer you'll be okay with them, you'll talk to them. But people won't miss on a mortgage payment with a bank. And I think as a developer, you've got to ask yourself, what level of credit are you willing to absorb as a business? It's even more complicated now with new changes in IFRS, which require you to, almost reporting or adjustments based on your rent to own. So I don't think we'll see too much more on the rent to own side. I think we'll see more on a formalized tenant purchase scheme arrangements and more long-term payment plans where the asset remains with the developer, but someone pays over time. it's unfortunate that we've sort of got to this situation, because I think it's a pretty innovative way of, you know, getting someone towards home ownership. And that was always the goal. How do you make home ownership easier for people in an economy which is challenged?
I think that's what the government is trying to address through the KMRC. But until such a time that either we have a lot of impact money that does not demand very high of return, then rent-to-own initiatives will be very difficult to pull off, because I doubt there's any investor outside here willing to give money for 3% for 25 years, still take a credit risk on these customers not being able to pay up. Yeah.
If I can just add on to that, it's not that rent doesn't work, but it's a structural issue within our economy where risk-free is higher than rental yield.
Yeah.
So as a developer, you've got very return to holders who have a return on equity expectation or a return to your financing partners. On a rent-to-own basis, you're effectively carrying a negative because you've got expectations of return 12, 13, 14%. And you've got rental yields which someone is 6% at the maximum. So you're effectively subsidizing someone for their home ownership and paying out of your pocket every year.
Okay, thank you for that. Let me get to two gentlemen, then I'll open the floor for questions. So in case you have a question, just shoot up your hand, keep it very brief, and direct it to one panelist. So there's a question being asked here, and let me start with Robert. And the question is, we launched day trading hoping it would be able to create an attraction to those who bet. We don't seem to see that. Is there a problem with the youth as far as investments are concerned?
Okay, thank you for that. I think, in my opinion, having interaction with over 5,000 investors, because we do personalized financial training, we need to broaden the conversation and look at what we call house affordability. House affordability is about an individual being able to afford home ownership or even to pay rent. And I think that's a conversation that we are not ready to have as a country. So probably what we can afford is not affordable housing, but subsidized housing. Yeah. Give me a house that maybe I'm supposed to pay 10,000 Kenya shillings per month, but probably my income per month is 10,000. So where will I get the money to pay that house, however cheap it is? So I always say that we need to configure the economy in such a way that we are driving more employment. We are talking about an employment rate being high, leading to high dependency rate. So FKE said that currently one employed person tends to have 5 dependencies. And we already saw that people who are formerly employed are only 9%. So I think we really need to configure the economy to bring more people into income earning. Income flows into investment. So for that reason, I feel like the capital markets, in a way, that is advantaged when it comes to retail investing. So for my background from fintech, what I would say, when I look at money, in my opinion, I look at there is the velocity of money value, which is payment. And that's what has been very popular in Kenya. And it's because of technology, we have what is known as availability bias. So the apps are available, you can just press send and you send them. But store of value of money is different. So that is the wealth layer of money. So that's where money grows when it is at rest. So you need to let that money breathe. And it requires different skill set to make people do that. So betting and Forex, I'll say that excitement. And unfortunately, if there's no investor education, then there'll be the competition for the store value of money, which is capital markets and investing in the stock markets. I think there's a lot of need to front-load investment when it comes to investor education. And having worked in the banking sector and telecommunication sector, I think the capital markets in Kenya is the only places where people sit in offices. In the banking sector and telco, we used to be on the ground doing offline activations. Everyone who has an M-Pesa line, the activation was done online. Someone filled a form. And even banks, people fill a form to be onboarded offline. Then now online, we can do transactions. So I think that's a big miss for the industry. We need to get out of offices and also need to be on the ground where people are. We change our language and speak to them. Until then, I don't think if tech will be strong enough to cover the barrier that we have, but we must be willing to front load investments. Yeah, so that's that you can learn from telco and banking. I think the tacit knowledge is available in Kenya. Thank you.
Solomon?
I think for me is there are different both day trading and in betting, because for a young man who is looking to bet, they know if I place a bet on Saudi Arabia versus a country, is what I'm going to win. So, but for day trading, they're not sure about the returns. So I think that's one place where it becomes, I would say, an advantage over day trading. And then you also find that even with apps like comparison, apps in betting and apps in stock trading, you find that it becomes cheaper to bet than to do day trading, because the trading, if you factor in buying in the morning and selling in the evening, you have to make more than 4.5% for it to make sense. So, and for betting, Bora too, my whatever I've predicted has come to pass, then I'm very assured that I'm going to get the money or the income that I knew I was supposed to get. I'm going to get it. So how we can cure this is again on investor education. In as much as there is betting, you also need to know that you also need to preserve your wealth or preserve your capital. You do not have to commit to betting. And it would also go a huge way in terms of reducing the cost of stock trading, and also maybe even the amount of shares you can own. That could work with a fractional ownership of shares, whereby if you have 50 shilling, then you'll have to trick the mind of this young guy into, do I need to go betting because there is a chance I might lose, or do I need to enter into the stock market whereby I can buy a counter, and in this counter, even if it goes down, at the end of the day, I'm going to get a dividend payment, which over a period of time might or could be enough to back my initial investment.
Thank you for that. Any questions from audience to the? There's a question there. Please introduce yourself and shoot your question straight to one panelist. Any other beyond that one? All right.
Thank you so much, Jambo.
Jambo.
I'm Robert Manyala from a company called Robisearch Limited. We are a city company. We help people sell what they sell faster by 90%. So we do digital marketing. Now, my question is very simple. What will you advise? How will you advise people in business maybe to take up technology in a way that they can be able to return their investment very fast? For example, we have people who have rental, and you realize you don't have tenant to come into your house, and you have maybe used 10 million to buy this building. But these people sometimes, because of change, it becomes difficult for them to change to use technology so that they can be able to use maybe best way to get more customers. For example, maybe like what we do in Robisearch, we can use influencers to talk about your building, then people will get to buy to the end of next year. So what can we tell these people in terms of technology? How can we advise them to tell them this new change is good, because if you don't change, change will change you?
So that, I guess, goes to our real estate panelists. I don't know who wants to.
Before they take that, I think we should hire him to the NSE to push investor participation. With a 90% success rate, then...
that's the guy we need. Huh?
So the question, I think technology generally has, especially in the real estate sector, has been quite, I think there's been a lot of technology on the construction side. And there's growth of like online platforms which are now helping with real estate, especially on the marketing side and on the sales side. I think firms have been a bit slow to adapt to technology, and we're now seeing more growth. I think internally, looking more at looking more at trends, I think real estate firms will slowly start to come in with artificial intelligence just to try to understand where and how do I target them more. But I think, again, just similar to investors, I think it's down to education. Do real estate development firms even know that this technology exists and we're pretty simple people, right? And I'll tell you, we're not complicated guys. Tell us you're 4 houses a month, and my technology will take you to 7, right? Because of 1, 2, 3 things. You're welcome in our office all day long, right? And that's really how real estate developers work. Ultimately, it becomes a numbers game. Personally, we are yet to see sort of any technology that will increase the velocity of sales to that sort of a level, because I think in real estate, it's a much more difficult purchase decision. Someone's still got to come, see the house, due diligence. You know, no one buys until they actually visit the site. So that's why the uptake of technology, especially on the digital marketing and social media side, is almost more for awareness of your product and that you exist, rather than a sales tool.
Thank you very much. And just to add, as he has mentioned, real estate is not like your typical FMCG, where you're constantly moving a lot of products every day. First of all, it's a long lead kind of project, where a project will take you a year or so. And so for us, in particular, what we do, we use technology to help our buyers sustain their rent. So we have this, for example, like a rental portal, where we will advertise it along social media and what have you, and anybody who is interested, say in a unit, will say, I would love to live in this particular place. Then when I come to you, I'll tell you unit with a tenant who's already interested to live here, and this is the rent, and this is how you make your money. So that's how we use real estate. And of course, a lot of big data targeting, because most of the people are on social media, and on a day we spend a lot of time, and we're able to use the tools that the big technology companies have availed to be able to target the various people. So that's how we use technology within real estate.
Very briefly, Robin.
Yeah, and just to add 2 things. So first of all, I think what you need to look at national level is reskilling and upskilling. So if you look at a country such as Singapore, they have a platform where all people can skill themselves. They can upskill on new skills, emerging trends that are going to affect their jobs. So that is a national initiative. And then the second thing, I think the problem that you have, the way the current financial industry in Kenya is structured, it is more sales-driven than even helping the people that it is serving. So for example, if you look at a company such as Centum, they have a subsidiary known as NABO. So NABO, if connected with Centum Re, it can actually help people with the goal for partnership. So it needs to start talking to each other, because I might not have the amount to buy a house now, but 3 years from now, through the money market fund, is that. So we see that a lot from retail investors. We are not helping them. We have people who are interested in you to be a high net worth individual, then they sell you a house. So there's mortgage lenders. But if they can come and sit with you at your dinner table, they'll realize that actually they can even help you to furnish the house, buy the furniture. So you need to expand the value chain and offer more value. And even banks have realized that actually they could offer more to their customers. They are seeing that a big asset management, and they're seeing that this is something that could have worked even 10 years ago. It's just that they've started doing it now. So that would help to be able to have journeys, because money and wealth is about a journey. But if you want someone who has 10M today, I think there are very few in Kenya, but you can help them reach the 10M.
Thank you. Let me take closing remarks, because I didn't see any other hands up. Closing remarks. Oh, yes, there's a hand here, sorry. Mic check.
Thank you. I think I had a question on real estate. We keep talking a lot about the retail investors towards real estate investment. And if you look at the approach that we've taken largely here in Kenya, it's been largely to rope all these investors through the real estate investment trusts. But since Fahari IRA, it was launched, I think, almost 10 years ago, there has been fairly low. Of course, if you then look at of most developers doing real estate developments at scale, the funding structure is to a large extent towards bank financing and probably equity from financial partners. So the challenges for developers in using rates, and specifically the development rates or the income rates in moving the asset class and incorporating a lot more of the retail investors. Yeah.
Thank you for that.
What do you think we can do?
Thank you for question around real estate investment trust. Who wants to go for it? I was moderating a discussion on REITs conference not too far back, and one of the challenges that was faced in the market was just basic appetite from the investment community. So even the pension funds who were sitting on flash cash didn't exhibit a lot of appetite for it, but let me listen from the gurus here.
So I think real estate investment trusts are the right idea. Let me put on a developer hat and then a retail investor hat. I don't think REITs sort out the retail investor, right? It's a minimum investment ticket of 5 million shillings, right? You need 7 investors. The guy who has 5 million bob doesn't need the benefit of regulation. So I think fundamentally the structure is a little bit skewed, and there needs to be a revision, even from CMA, towards understanding sort of, you know, what are they doing with it. The second, I think, is an issue with regards to the uptake from pension funds and the rest. Unfortunately, until the narrative changes with regards to real estate, right, and listed real estate, there's not going to be appetite from the pension funds. And if the pension funds are in the room, they can speak, because all they've heard horror story after horror story, right, with regards to listed real estate. Now, we hope as Superior Homes, you guys as Centum, you know, that this narrative will change, and the drivers will change. But it comes down to, number one, fear from the trustees. I mean, you guys have seen REIT results, right? 40% goes to costs. So someone sitting there, I'm only getting a distributable income of half of what I'm supposed to be getting here than if I own the asset directly. So that's issue number one. Then you've got REITs giving you 3-4% rental yields. It's no point. I'd rather buy a government instrument. And then the challenge then comes on the development REIT side, where investors' expectations are skewed towards this magical 25% IRR number, which I personally don't think exists in Kenya anymore, right? Gone are the days when real estate was so undervalued that you make that sort of a return. So it's also adjusting investors' expectations, but then no one wants to have that discussion that it's now no longer this 25-30% IRR. You're probably going to be lucky if you walk out of there with 15% compounded year on year. So there's fundamental issues with regard to structuring of REITs that don't favor a retail investor. The challenges that we all see in the real estate market are those who a lack of regulation. You need to regulate the guy with 500 bob. The guy with 5 million shillings of investable cash doesn't need the benefit of your regulation. And unfortunately, the REITs are providing regulation to those who have high levels of disposable income. So it's almost upside down in terms of its approach. Costs, really big issue, really big. We look at it as developers, and we look at the costs of maintaining a REIT, the costs of the regulation with regards to it. I mean, you're eating up half of your gross profit margin in costs. It makes sense. And then third is trustees. When they're not sure about the underlying return, because developers have for very long time overpromised returns, and I'm sorry I sound so pessimistic about this. I would love for it to grow. But the truth has to be told, that we need to adjust our expectations as to what returns are in the real estate sector as an investable asset class, and then we'll get a discussion going with regards to capital.
Thank you. Fantastic. That's a good point. So let's get closing remarks. Let me start from Solomon, coming this way, and then we shall usher in the next session.
Yeah, I think I'm going to start adding more to what she was saying in terms of the issue with the REIT participation. and say, how can we make it more affordable for the retail investors? So if you go back to our grandparents, our parents, and some of us right now, you find that we have at one point participated in Tamas whereby we are contributing and buying a land, and then maybe do a development. That's a form of rate. So that means the issue is the minimum amount of investment and also the way to go about it, and also investor education. So if you are able to get those three things right, then rate participation from retail investors will not be an issue. And also, generally I feel like investors need to know it's an asset class that exists and they could get a form of return from it. Because I find there are questions that ask you on, I've invested in unit trust, I've invested in bonds, I've invested in shares, where else can I go? Okay, you find that there are investors who are hungry for diversification. So that could be an option for them. Now, in terms of my closing remarks, again, to the retail investor, for those who are watching us, for those I would like to tell you that it doesn't require much of you to start investing in this case, I'm going to talk about equities or even bonds. Because most of the investors I've talked to, they believe that until I make that 100K, sitaifikiria mambo ya shares. I'll not think about shares. I'll think about shares when I get a savings of 1 million shillings, then I'll buy my first shares, which I think has been a factor of poor participation in the market. So for the investors, you don't need much to start participating in the market. For the equities, you need to buy 100 shares of any company. Some of these companies are at low prices. There's one stocks. Okay, so there's one that goes for around 1.7. Say you need how much?
That's hidden in plain sight. Which company that is?
Times 100.
Yes.
So you need 100 shillings. So you can buy a packet of unga and buy 100 shares.
Thank you.
Yeah. So you don't need much to participate in the equities market. In the bonds market, some bonds for as low as 50,000 shillings. You can use other instruments to save to 50,000 shillings, and you can participate in that. So I think that's my main message for today, for all investors, and also the fact that we have also advanced in terms of technology, and we are now able to participate in these markets more freely, even using the technology that we have on the apps that we have on our phone, using the internet and all that.
Thank you.
Okay.
Robert, in a minute.
Okay, so I'll retail investors, I would just encourage professionals and entrepreneurs to try to have their money work for them. So if you're a professional, it's important to also have a portfolio outside your profession, probably an investment in unit trust, government securities, or the stock market that is also working on your behalf. Then for the capital markets, I would say that now they are too risk averse. They need to front load investments in terms of engaging investors so that you can drive the numbers. And I would like us to have an idea for the capital markets that we should only be talking about funded accounts. So as we start a year, you share with all of us your targets for the year, then at the end of the year, you measure it. I think that's the best one. That's the only way. I've worked with several people who are looking at retail markets, and I find that that works the best. Okay. So that way you'll work hard and do things that could actually bring investors into the market. You'll go on with the product launches, technology. Personally, I'm from tech background, but I'm still not yet excited about use of technology because it's not scalable. The efforts needed to bring people into a technology platform from a cost of customer acquisition is too high. So it means that it's very difficult to be profitable with that. If we invest in engagement and bringing investors on board, then we'll be able to offer them an array of products and build profitable apps.
Thank you, Robert.
Firstly, for having us. I think it was a really engaging discussion. From a real estate perspective, I guess the advice to investors is consider working with an institutional partner, someone who's got a track record, someone who's visible, someone who you can visit their developments and see what they're doing. You know, Home Centum. I mean, we've got good partners around the table, so investment options are there. And I think lastly is I think we're privileged to live in a world where, or at least a region of the world, that's going to experience a lot of growth over the next 10, 15, 20 years. We're in a much better place than a lot of the global economy. So I think for investment in real estate, in the equities market, in the bonds market, be patient. You're going to have bumps in the road, but people don't like bumps in the road. But you know, we're going to see good GDP growth, urbanization, growth in the middle income. And those are generally factors that, and yet debt levels are pretty low in this economy because of how expensive debt is. So it's largely an economy that's not fueled by debt, but by actual underlying fundamental growth. Yeah, there are challenges everywhere. So it's an exciting time, and yeah, we look forward to being here 5 years from now and seeing how everyone's done on their investment journey.
Just to clarify, when he talks about debt being low, he means personal debt. Public debt, of course, is a different story. Solomon, please.
Okay, my closing remarks are two things. The first thing is we need to change our culture and start to look at real estate as a very safe investment, and to look at land, which people are very passionate about, as an input towards creating something over and above that. I think most of us have pieces of land in the middle of nowhere with no investment thesis. Basically, you're just buying to speculate, and you have no control over the of that. Shiva said, I think it's very important to partner with credible partners who are able to work with you in this journey. And lastly, to finish off, real estate is a very good asset class if purchased with common sense and paid for in full. It can be a very good and safe way of storing. Thank you.
Thank you so much to our panelists. Thank you, Solomon, Shiv, Robert, and Solomon again. Thank you so much. Let's give them a round of applause as they resume their seats. Thank you, guys. And thank you so much for your questions, for your participation, and for those who are fielding them online. We really appreciate. So next on stage, let me invite back Samuel to take it away. Thank you.
Let's give it up one more time to our panelists. And one of the good things about being the MC is I get to also appreciate Julians for such a great job. So let's appreciate Julians for being able to ask the relevant questions. One of the things I admire about him as an MC is how eloquent he is. Julians, when I grow up, I want to be like you. Yes. I'll just keep the hair. So at this point in time, we want to hear from Abojani again. They'll be speaking to us for a few minutes, and then after this, we're about to be wrapping up the session, so we probably have about 20 minutes or so. And then after this, I know you guys are itching to network. Please ensure that you get to hear from a few people. The guys at the booth are still going to be here waiting to hear from you. So, karibu sana.
Thank you very much for having us. So I'll be talking about investment opportunities for retail investors. And today I'll share with you my lessons on dealing with retail investors. So when we started with the stock market, and we actually have one of the biggest Facebook group locally on investing, known as Young Nairobi Stock Exchange. It has 87,000 followers. So
check 1, 2.
We thought that stock market is where to start, but later on we realized that. Thank you. Yeah, so we realized that when you come to talk to people about the stock market, for almost 90% of people in Kenya will be talking to you. Yeah, so that's why I feel so sorry for the capital markets, especially the Nairobi Securities Exchange. You'll come and say, we are the Nairobi Securities Exchange, this is what we do. But many people actually want to know the basics of money management, like how do I budget? And it's possible to have a situation whereby you have even a PhD in Kenya, even in finance, but you have never been taught on money management skills. So because of that, we expanded the conversations into 12 value chain, where you start with financial planning, then you go to wealth management, you look at risk management using insurance, planning, debt management, home ownership, estate administration, finance for kids, finance for couples, career development, entrepreneurship, and taxation principle. So when you expand the conversation, you're able now to reach more people. The people will only listen to you when you talk about managing money. So once they've come to you through that, now you can talk about the investment opportunities that are available. Yeah, so because of that, I feel that that is something that we can borrow from, we can learn from, and start from the basics. Because if you are the investment banker, you'll find that generally you're a bit too sophisticated in this market. So you need to find a way, like other industries found, to connect with retail investors. Yeah, so that's very, very important. So about money management, again, we collapsed it into 3 things. So first, we need to look at the mindset. Then we look at the skill set and the tool set. And I'll talk about the mindset. That's where it all begins. And I've realized that now you have investors who want to feel like they own part of the journey. They don't want to see as the expert, who knows where they want to go tomorrow. Just put your money here and don't ask questions. They want to be part of that journey, and they want you to engage them. So because of that, the mindset is important, so that they really knows what money means to them and why they are connecting. So once you have the right mindset, the second thing, which is the first layer as an investor, is to have the skill set. So understand Financial Markets 101, which instruments are regulated. Because sometimes people invest, then later on they'll come and blame the regulators. But clearly, the company they invested in is not in the list of licensed players in the regulator's website. So clearly that means that the skill set layer is, and that's where education will come in. So if you look at capital markets, who are the regulated players, what instruments are they offering, and even banks, which instrument do they offer? Because when I was in banking, someone would put like 10 million Kenya shillings in a current account, then at the end of the year, they'll come to complain that how comes I've not gotten anything? So clearly, you can see why skill matter. Now, the disadvantage is that without skill set, competition basically is scammers. So they're having a very good time, because skill set, people have money, that's a very dangerous scenario. So after skill set, after they've understood what investment options are available and which investment will help them with their own goals, now they need the tool sets. So the tool sets are the investment accounts. So if I need to do real estate, where do I get started? Which forms do I fill and how do I get started? So if it is investing in the stock market, who are the regulated players and which apps are there that I can actually use? If it is a circle like that. So when you have these 3 and they understand them, and you're able to help them connect with what is this stock market all about? When you talk about Safaricom having returned, let's say 5 times in the last 10 years or 8, yes, it is nice to hear, but how will that help me as an individual? Will it help me the down payment for home ownership? Will it help me to take my children to school? So we need to actually sit as if you are in a dinner table and having conversations. So without that connection, like people have their personal goals. Is it retirement? Is it financial freedom? So that ideally is how now retail investors we've seen in able to connect. And people will see that actually having money in the money market can help you if you lose your job. So they'll realize that this is an emergency fund, and it really helps you. And with the growth that the capital markets can offer, you can tell them that you might not have a lot of money to start a telecommunication company, but if you believe that there's growth in that sector, then investing in this company, you'll be part of growth of that company. But what is in it for you? It will help you with your financial freedom journey. What does financial freedom mean to you? They'll tell you because they have the answers. Yeah. So after understanding those key pillars now, we'll now go to financial markets. And financial markets, for them, we see that they need to start with the basic money management skills. Because what an emergency fund, for example, buys you, it buys you some freedom, a bit of luxury, not to worry about today's problem. And once they're at that level, then they're able even to think about long term. So we need to find a way, the basics, money management, then you go to instruments that can help people manage emergencies. Then once we've driven them to those instruments, they'll see the growth, they'll see the consistency, which can only be done practically. So we need a lot of investing journeys. Currently, it's about everyone with their product. Someone will say, I have a retirement product. Someone have home ownership. someone else have an emergency account. So they're all over, but you need to help this customer by when we go to their dinner table, we see how we helping them to be able to get school fees for their child. How we helping in high school, and they need maybe career planning and things like that. So when we help this family succeed using financial instruments, we'll benefit from it. And that's why the journeys are very, 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 very important. Like we've told you, you can actually save consistently maybe in 2 years to raise 5 years, and that could be the down payment for home ownership. So that connection needs, because we are talking to this family, you know, you can't tell them that for me I can only help you to up to is complete information. Yeah. So you tell them, yes, you can own a home, but there I see your income. You need to do this consistently in 3 years. You'll be able to have this much. Then now give you the mortgage. So when you walk that journey with them, they'll see as life partners in their family, and they'll trust us more. And that trust is what can wealth tech, if you want it. Because without the trust, people will come to the apps we launch, and they'll just put 100 Kenya shillings, you know. So that trust is something we need. And the trust only come in when we're helping this family succeed and by connecting with their goals. So when you've done the basics, you go to market. So capital market, to be honest, financial services player, I think should not sell the stock market to someone who doesn't have an emergency fund, because it is a risk to you. What will happen tomorrow if an emergency comes up, they'll sell their shares at a loss and they'll never come back. Yeah. So, but if they have an emergency fund, they won't worry. So the next time the market recovers, like at the peak of COVID, I think the market went down. Then now there's a time it went up. So when they see these things practically, they'll see that actually investing in the stock market is long term. So there's only so much that theory can do. But when they see these things practically, like they get the dividends, they'll be so happy, and they share the vibes, because retail investing, again, it goes with vibes. And when they see that it can work, they'll know that if I want to do stock market, it's for the long term. Then again, income security is how to help us. So we'll actually tell them that I can see now you're at this and that age. At this point in time, you need to consolidate your income or whatever you have. So probably most of us here, we are guilty of having the several pieces of land in the middle of nowhere. Have as many as 6. So at some point in time, you need to tell them probably you can sell 3, raise 6 million, use that to buy a house or put it in infrastructure bond. When they see that this thing is really working helpful, the financial market will grow. So that is a sacrifice that we can do, and that's the only way that we can bring more people to the market. Because currently, if everyone is just doing their sales, they'll tell you this retirement money that you've gotten, buy this house, rent it out. They rent it out, if COVID comes, no income, there's no money to buy food. Yeah. So if we can look at it that way, because as we grow this family, we need to bring adjustments like now banks are doing, and that again is a challenge to capital markets. That is the banks that are currently doing financial literacy. So the question to you is, where are you? So with financial literacy, banks have realized that they're de-risking SME lending. And they're even bringing career coaches to help people earn for their careers. So when these people earn more, they're able to change jobs, they bring more money to financial markets. Yeah, so my closing remarks will be to expand the financial markets, help people succeed. If you're just doing sales, it reaches a point where you'll build houses that no one in the market can afford, because you've not helped them to get richer along the way. But if we grow rich with them, we'll be able to even build bigger houses worth 50 million, and they'll be able to afford. But if you insist on selling 50 million houses, not progressing in life, I'll find a situation whereby we've gone too much ahead of our people. So that's where there's the element of shared prosperity. I need to invest in social elements of the society that we live in, that we uplift people and grow with them. So those two pillars have to work together. And I'm seeing some organizations that are actually keen on that. But if you're just interested in commissions, transactions, you can actually see that the only enough people make even your business scalable. Just have a cyclic business during rallies or market, the bull markets, you are making money. During the bear markets, you are losing money. But you'll find that when these people grow, they'll become resilient. And even during tough times, we usually say that still there's money moving around. Yeah. And when there's money moving around, these same people will still be using sort of some services. So that would be my say for today. And I'll just market to really think about this customer. Because I've seen a situation whereby standalone money market funds that are at a disadvantage now, commercial banks are getting this space. So if someone can offer 4 services and you are only offering 1, you just need to have a board meeting and think about business that you are in. And that's all about being on a dinner table of a family. Ask them what they want. Don't assume. Ask them what they want, and you'll actually see that probably that stock trading alone cannot sustain your business. Probably you need to help them with the emergency fund. You need to help them with the retirement journey. You need to help them to take their children wherever they want. Some want to take their children to the UK for education. It is a family decision. But can you be a partner in that journey? If you are for 5 years, they'll be part of your services for the longest time. But if you just commission for today, clearly seen that that's not sustainable. So I want the financial services industry, especially the capital markets, work with people, help them succeed, bring on career development. If they learn about these new skills and they get jobs and they get that increment of 30,000, believe you me, that money will come to you. But if you are not interested in them when they are jobless, you always get a job. When they get a job, they'll have more bargaining power, and probably they'll have moved on to other things. So it should be sort of a partnership and create jobs where people can see that what you told them 3 years ago is working. So it was not just about the 10 million transaction commissions that we're interested in. Thank you.
Thank you so much. Let's give him a round of applause. And something he said that is quite true. The person who holds someone's hand when they're low, that's probably the one they will walk with. See, that's true. You've probably experienced that in your life. Most of us are probably people who held our hand. So, Share Hub, karibu sana. Let's give it up for her as she comes.
Hello. Ladies and gentlemen, you're going to have to give me a lot more than that. I have walked a long way to come here. Thank you. So let's do a little bit of Nollywood. One of the things that Robert just said is that there's only so much that theory can do. So let's try that out. Let's assume that I'm about to give out a car today. This car can only be driven by someone who is a trained pilot. In case you don't know, there's such a car in existence. It's being developed right now. And it goes from driving on the road to actually flying in the air. And you should be able to see it in a few years. Why am I doing this? At some point in your life, somebody taught you how to do things. Cynthia, my name is Funke Michaels. Well, the full name would be Olufunke Nenaya Michaels Akweke Okereke Wamiano. I always say that I was sent to school and I met a Kenyan boy. And well, here I am. 5 kids later, the rest is history. So what is ShareHub about? And why am I offering you a car that you need to be a pilot to drive? One of the things we've learned today is that just knowing about investment is not enough. You need the knowledge that is personal and that translates to generational wealth. That's what ShareHub does. In the same way that each one of you is an investment made by someone. Your parents paid money to give you an education. Your teachers time and effort to teach you what you know today, which gives you your means of livelihood. We are democratizing investment in such a way that everyone can learn how to do the things that Robert Abajani was talking about here. So when you go on our app or web platform, you will find games, quizzes, challenges, interactive simulations that help you to see how the market really works. Now, because virtual environment, we help you to not make those beginner's mistakes that cost you all your money. So when you tell children or teenagers or undergraduates or entrepreneurs or border riders or Uber drivers or wamamas, people who make chapati, that it is possible for them to learn investment and actually participate in the capital markets. It sounds unbelievable, but we're seeing it, we're doing it. Saturdays, you come to ShareHub, on the last Saturday of every month, we have a gathering, in-person meetings, and my mwalimu is here. Linda, where are you? Please wave. Please give Linda a round of applause. Now, at ShareHub, we have a mwalimu who's dedicated to teaching people, and it doesn't matter who you are. If you walk in, questions, we will answer those questions. If you meet us online and you have questions that you need persons to address, we will address those. What do we tell about right? We say if you have a phone and you can download ShareHub, then you can be part owner of these companies that you see listed. You can earn dividends at the end of the year. We also tell them that if you can bring along your younger ones, bring your children, bring your nieces and nephews, make sure this knowledge is passed on, then you would have taken the first step to transgenerational wealth building. So let me ask you, before you begin to fly a car, do you not first learn how to walk? Before you begin to walk, not crawl first? Did someone not hold your hand and teach you to take those first baby steps and then watch you get up and begin to run? So there's a reason why ShareHub is rounding up this meeting today. A Chinese proverb says, if you want to make an investment for over 100 years, then you need to educate. So we're here to make sure that we're educating our public. There's only so far that the theory is. With ShareHub, you can actually participate. You can try it out in a safe environment. You can use our virtual money to the millions and see how it works. With market information, you can get to see what is going on within the market. We have about 10 years of historical data, and you can actually access that on your phone. One of the things that Solomon was speaking about in the last panel is that technology has enabled us to do so much that we couldn't do before. We're using ShareHub even to teach in the higher institutions. So when you have students of commerce, business, IT, they can practicalize what they learn in class on this platform. So here's my question for you today. As we round up the year and we go into 2020, what are your plans for helping this economy to grow? What we do at ShareHub is the kind of work that's going to yield the kind of exponential growth that will take our market to where we would like it to be. Imagine if one person per household is savvy enough to manage the investment of that family. And that one person teaches another one person. And that other person teaches another one person. In 5 years, how many members of your household, my household, will know enough about investment not to make these common mistakes that we have heard about today? So as we go forward, I'm going to ask, tell somebody about ShareHub. Tell somebody about what we're doing here in Kenya. We're going Pan-African because we see that we can do it here. We can do it in other African countries. We can mirror the stock exchanges. We can teach people how to invest. We can make it a part of our lives as we go forward. And don't stop there. Get online, check us out. Tell us what you notice. We're very open-minded people. We're a team of amazing, strong, multi-talented women. You will love us. And please, come by our offices at IKM in Upper Hill. We love to see people. We want to talk about this. We're growing, so we want to grow with you. Let's partner together. Let's help to build the kind of regional economy that we know that we can do that. Thank you for taking the time to be here today and for listening to us. And please stop by. We're right there in the corner. We have a few gifts to give to you. Thank you again. Bless you all. Barikiwa sana. Thank you.
One more round of applause. Now for the final speaker, AIB Axis, please come on stage. And then after this, we are going to be having the vote of thanks. And as we continue, kindly remember one last call. You know, I know there are places where you have one last call. So this is the one last call for this event. Hashtag Investor Education Conference. So just, this is what I'd like you to do. On any social media platform, how this forum has helped to impact your life. Whether you'll do a photo, you know those photos that people post and then you look at the caption and they don't make sense. Yeah, someone is posting a photo of their selfie and then they're like, hashtag God is good. You're like, yes, we know, but how is it related? But what you could do is just take a photo or on just something and say how this event has impacted you so that we can create more awareness for the next one. Sawa sawa? Karibu.
Thank you. Back again. Back again. My name is Solomon Kariuki. I'm an equities and fixed income analyst at AIB Axis. I'm back here to insist on the message of it doesn't take much investor to participate in the local stock or equities or shares market. So when you talk about equities, shares and stocks, it's the same thing. They have invested in the equities market and you think they have invested in something fancy, it's the same thing. So when you talk about investing in shares, investing in stocks, it's the same thing and it doesn't take much of your time. So what I'm trying to say is that with the modern advancements in technology, we have been able to allow you as a retail investor to participate in any or in the available investment opportunities at the local NSE market, the AIB DigiTrader app that we have today. So the AIB DigiTrader app is one of the few apps that we have in the market, available to retail investors on both Android and Apple iOS, whereby you go to download and within less than 24 hours, you have opened your CDS account, it is active, you can fund it using M-Pesa, using a pop-up M-Pesa message, and you can start trading. Sometimes, I'll give an example, like when EABL, Diageo said that you're going to tender offer for EABL. That morning, it's when some of the investors who I had been talking to are telling me, CDS tunafungua aje, when the price has moved from 138 to 70. You see, by the time opening the CDS account, the price is back to 165. So you need, it's not difficult for you to open the account. It's something we can do right now. If you have bundles, I think you also have Wi-Fi. So you can take up to your phone. If you don't have the app, download it. By the time you're getting home, the CDS account is approved, and by tomorrow morning, you're back in the... You have been postponing because the diseases we have as Kenyans is procrastination. You kweli? Mwezi sama ni kweli, but you know it's true. Okay? Deep down, you know it's true. So I would like to urge you to stop procrastinating today. Download the app, fill in your information. Doesn't require much. It's your bank details for the payment of your dividends, a phone number for those who want to be paid through M-Pesa. You also need your national ID number, and that's it. 5 minutes, you're done. Okay? So it doesn't require much, as I said. 300 shillings, factoring in that we will charge you 200 shillings every year for maintenance, and then you are good to go. Remember that stock price that I talked about that trades at 1.7. So if you are willing to invest in that, it's around 170 shillings. Okay? And with 170 shillings, that is here somewhere. Yeah. What else can you buy with it? So many other things, okay? So if you're looking to invest in the stock market, don't wait any further. Here is your opportunity. Don't procrastinate anymore. Download the app. Everybody nowadays, even if you have that Kabambe phone, it's for other things, okay? Most of us have two phones. We have the smartphone and the other GSM phone. So because now everybody has access to a smartphone, it will enable you to participate in that. And the reason why I'm very specific on this AIB DigiTrader app is because we also offer investment support. From my engagement with some of the investors in the market, I've come to discover that some of the investors bought shares because of the name of the company. Long time ago. And those are questions who are getting. I bought Company X, sijui kafanya nini, or sijui the director, what, all that, all those stories, okay? Most people in the stock market, without the proper advice or proper guidance from the people who are guiding them by then. Maybe the trading person or the sales person who was directing them to open the account back then, they had targets to, so they told him, buy Company X, and they went ahead and bought Company X, okay? And maybe that person had taken a Mbukinya bus to come to Nairobi to open the CDS account. And then they bought one of those companies that are not performing well. So at AIB, we usually offer support for you. We work with you. We have whereby you can join for daily market updates. We have a Telegram channel whereby you can join. Every week we open the channel for engagements with analysts, myself and my colleagues. We are open to answering questions from you about the market, because usually that, like right now, there are so many things that have happened in the market. Centum share takeover of Kabasid, BOC, there is that Diageo, there is that Nimburuti takeover. All those things are happening in the market. And some of this language that we as investment bankers to write those things, they are not friendly to the local investors. So it's for us to break down that language and make sure that we are allowing the retail investor to digest that information in the local language that they understand, okay? So we try and do that for you. We try and offer that support so that if you're going to make that investment, no, not if, when you're going to make that investment, then we are going to be with you. You're going to make sure you have bought into the right companies. We also monitor your portfolio from time to time. It's something that we do for free. Come sit down with us, monitor your portfolio, see what you can get out, see what you can add in, see how we can align it to, again, to your investment objectives. Can give you the top dividend paying counters. If you're looking for long term, we can look at the counters for long term, depending on your investment needs. So everything, all that is available using the digital app with AIB Access. I think that's all from me. I wish you a happy time, a fruitful one. And if we won't meet again, Happy New Year and Merry Christmas.
Thank you so much. Let's give it up for him one more time. And with that, ladies and gentlemen, we've come to the end of the day. I'd like to invite Jalango to give us the vote of thanks. And then after this, I'll be directing you to the networking session. But Jalango, karibu.
Hello, everyone. You are good? You have enjoyed?
Check 1, 2.
You have enjoyed yourself? Are you looking forward for the next? Thank you so much. Thank you so much, Bwana MC. I think mine here is a very small task that I've given, just to give a vote of thanks. First of all, I want to extend my honor to be part of this particular event. It's been such an eventful conversation that we have had. And I want to really extend my sincere gratitude to our Dr. James Moria for agreeing to or accepting to be part of us. We also want to thank our speakers. They've really done a good job. They deserve a clap again, right? Thank you guys and be blessed. To our sponsors, we are honored and we are grateful for believing in us. We ask you guys to support us again when we reach out to you again next time. To our delegates, the individual guys, the SMEs that were part of this conversation, the individuals that were here, we really, really appreciate you, and we want to thank you sincerely for accepting to be part of this first event of its kind, okay? To our MC, moderator, thank you so much. And on behalf of Nation, we thank you and we honor you. I hope you'll again accept to be part of us again next year. The Nation Media Group staff that also spared, I know you are ever busy. So thank you so much for sparing your time to be part of this conversation. Okay? To our suppliers, the guys who are there, you have been there throughout. We really thank you for doing a good job. To the hotel as well, thank you for us and giving us a very conducive atmosphere. I think the meals are okay. I don't know. You enjoyed the meals? Yes, thank you so much to the hotel for accepting to host us. Yeah. And we also want to thank the Almighty God. Without him, I think, yeah. So we also want to thank God for, of course, giving us the life to be here. All right? So thank you so much, everyone. As you go home, back home, well safe. May God also, enrich you in all the way that he can. Thank you so much, guys. And I think I'll get back to the MC. Thank you.
And thank you as well for being part of the planning team, along with James Sogoti and Max Mutua. Let's give them a round of applause. Let's also give a hearty round of applause to the whole team that participated in planning this event. So let's just give them a round of applause. Amazing. So we have registration for hard copy newspaper and the e-paper at the registration desk. Kindly, if you'd like to get the newspapers, you can check them out at the registration desk. That is for the Nation, Business Daily, East Africa, and any other papers by the Daily Nation. And with this, ladies and gentlemen, we've come to the end of this event. I'd like you to clap for yourself for being here. Yes. I now know how much you love yourself based on how much you've clapped for yourself. Feel free to engage with the booths, get to know what it is they are offering, ensure that you get a contact or two or 1,000. And till the next event, I've been your host, Sam Muregs or Samuel Murega, the baby-faced MC. For obvious reasons. It's not obvious. Tuonane kwa kona pale. Kwaherini. Thank you so much. To all the speakers, at the entrance. Thank you.